saying it is important. It is one of the first companies to really make such a big push to bring all of its employees back. Next week, the plan was to bring UK, London employees back. How does this work for the bank? Is this received well by employees? Yes, they're going to get free breakfast and dinner, but are they concerned about childcare? Are they concerned about vaccinations? Are they concerned about reporting their status? And then how cohesive does this make the workforce going forward to give Goldman Sachs a competitive edge, Tom? And these are the questions.
Sonali Basak again down at, I don't know what she's doing down there. I think she's getting free breakfast at Goldman. Solomon's giving out free breakfast this morning.
Wait a second.
Thank you. And we'll have Sonali with us here later in the hour. This is a treat. We do a lot in economics. We do a lot in finance. We do a lot in investment. But we rarely talk about the process of asset allocation. Jason Drow is at UBS. He's not going to give us a bunch of investment fancy analysis stuff, but he is going to talk to us about how people don't participate in the market and how asset allocation can give courage to people who are scared stiff. Jason, let's start with the basics. Is 60-40 dead?
It's not dead. It's more challenged. I think the challenge with looking at 60-40 right now is had a 20-year track record that has been fantastic, and it's been ideal conditions. We've had a 20-year environment where it's been the disinflationary growth. That is the sweet spot for 60-40 kind of portfolios. Going forward, it's going to be...
What we hear, Jason, interview after interview, is a barbell strategy. Is it asset allocation? Is a barbell strategy a replacement for desperation? Or is it a sound strategy in someone's retirement plan?
Well, it depends on what you mean by the barbell. I mean, I think the key part is like, what do you do with the fixed income portion of your portfolio? And that's the challenge, right? Because you have a situation where yields are low. The correlation right now between stocks and bonds is at least flirting with being positive, which doesn't give you diversification. And if rates rise, you get bond volatility. So something that we've kind of thought about, at least within some of our portfolios for at least a number of years now, is the more risk you're taking, you probably want some longer duration to kind of offset some of that, because there's still scope for rates to decline certainly at the back end. At the same time, you don't want to be really exposed to long duration because of potential for a rate rise. So it's almost barbelling within fixed income of either a combination of really shorts, to kind of avoid higher rates, but also longer term to give you that sort of long-term potential diversification, if we get a risk-off environment.
Jason, how important is Wednesday's Fed meeting?
I think it's marginally important. It's really, I think you guys were talking earlier that a month ago people thought not much would come out of this. Now it's really the question, does the Fed maintain the language they've been using all along? Which I think that's what the market assumes. That's kind of what it's pricing for. It's now kind of believing in the Fed's line that inflation is transitory. If the Fed gives some sort of hint that it's now talking about tapering or something like along those lines, that could spook the markets. We could see rates go higher. But otherwise, I think it's going to be, as you said, a bit of a yawner event.
Terminal. I think on Friday it closed at something like a record high based on sort of the knocks that down a level, because everyone's looking at inflation here and they say that will still. But if there's some threshold that you're looking at that really could sort of be, I guess.
So I think it's really the situation that would be the worst for the sort of 60-40 portfolio is if we start to get rates go higher. And rates going higher, maybe because of a policy situation, because it's really real rates that are going to go higher that are the real challenge. Because if they go higher, it could be because the market believes the Fed's going to get a little more aggressive on hiking, and if that happens, that's a challenge for bonds. It's a challenge for risk assets like equities, and there's not a lot of places to hide. One of the things that we've been advocating for a little while is thinking about exposures to commodities. Well, it's kind of a tactical reason we think there's more upside. But in that kind of environment, it's one of the few asset classes that historically has done well. So you're looking for some diversification against things that's like equity risk because it dominates your portfolios.
Jason, are we over-diversified? And I say this with dead seriousness about, if you have so many few winners, you want to be in them. And we all know the allocation risks here as well. But have we sort of marketed our way into over-diversification by having too many things involved?
So I think if you just look at the stock market, once you get beyond, say, 30 or 40 stocks, the incremental diversification benefit your portfolio starts to decline quite a bit. And you can think across asset classes, sort of similar idea. Because ultimately you're asking, what are you really trying to diversify against? And if you're worried about drawdowns in markets because of some risk-off event, we know that, equities and sort of all correlations for that matter kind of go to one. And so really it's equity diverse risk that really dominates your portfolio. So you can sort of diversify, but you really get the diversification, when you need. So I think there's an element of looking for too many things to kind of shed that risk. And is it really going to work when you need it? I think longer term, though, that's where maybe the diversification across different asset classes, style, strategies can pay off, because in that case, what really determines long-term returns tends to be the more economic fundamentals, and those can diverge more so over the long term than they can in the short term, which really kind of risk sentiment. It's going to cause portfolios to pull back.
Jason, thank you so much. Jason Draw with us with UBS on the allocation of said assets as well. Lisa, we don't spend enough time on this. I'll be honest. There's the vogues that come into it and all that, but it's a really, really important thing to how to split up the small pot that everybody's got.
And what does it mean to be diversified in a world where so many asset classes are moving in tandem? And I think a lot of people have moved to private assets, but even that increasingly is getting correlated to the same inputs, whether it's Fed policy and the economic outlook as public assets.
I mean, Romaine, I don't want to go all CFA on you, but you know where I stand on beta, and I'm a huge believer in sector diversification, not individual security diversification.
Well, and it's hard to get bias. That. Well, yeah, but it's hard to get that, Tom. And to Lisa's point here, the correlations, I mean, that could end up being the undoing, I think, of this bull market rally. The correlations are just high everywhere.
Yeah, I mean, to put up the 12-month trailing number was a banner, Matt, that I had an hour ago or so. I mean, the last 12 months have been just underperforming. I mean, it's been single digit all in all. I think we're up like 35%. Dow Jones Industrial. I mean, the NASDAQ, I mean, Romaine has just underperformed, up 47%.
Yeah, and I mean, I think what you're going to have to look for here is not only what the Fed does, but really how that feeds in here to some of those margins and that margin pressure that we've been dealing with. Yeah.
Tom, did that underperform your triple leverage cash?
No, but I'm comfortable.
Are you?
I'm sleeping at night.
Yeah, what are you drinking
on my way to
in the morning?
House. Lisa, go away.
Transitory.
With the First Word News, I'm Ritika Gupta. The U.S. is approaching 600,000 deaths from COVID, even as new fatalities, infections and hospitalizations continue to plummet nationwide. The vaccination drive has slowed significantly, but the country is largely reopening. Daily deaths have fallen from a peak of more than 5,000 in February to an average of about 300 over the last week. President Biden is in Brussels for the NATO summit. His presence at the meeting comes as a relief to many, and the leaders will tout, quote, a new chapter in transatlantic relations, according to a draft of the summit communique seen by Bloomberg. This is the first NATO summit since the presidency of Donald Trump, who's questioned NATO's utility, sparking fear he could withdraw the U.S. from the alliance. And Iran says it has reached a broad agreement with the U.S. over the lifting of sanctions on its industrial sectors, including energy. But the country is warning there is, quote, very little time left for world powers to revive a 2015 nuclear deal. The trade restrictions have all but prevented the Islamic Republic from exporting oil. Oil markets are keeping a close eye on the talks taking place in Vienna. And the American father-son duo charged with helping former Nissan Motor chairman Carlos Ghosn flee trial pleaded guilty in a Tokyo court today. Michael and Peter Taylor were accused of helping Ghosn escape Japan in late 2019, where he was facing charges of financial misconduct. The former auto exec smuggled himself in a case for audio equipment and boarded a private jet, eventually making his way to Beirut. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Wednesday, the Fed decides. Will the Fed react to accelerating inflation concerns? Are members eyeing an earlier rate increase? Coverage begins at 1:30 p.m. on Bloomberg Television and Radio.
It's worth going it alone if we can do more for working people in this country. You know, with 50 votes, we have the potential to lower the age of Medicare eligibility so that more people can be covered and guaranteed to their right to health care, as opposed to, 60 votes where we do very, very little, and the scope of that is defined by a Republican minority that has not been elected to lead.
The gentle lady from the Bronx there on CNN with Dana Bash, and we thank CNN for that State of the Union as well. We welcome all of you on radio and television across this nation. Emily Wilkins darkens the door right now. Lisa Bramowitz, Romaine Bostic in for John Farrow, and I'm Tom Keene. Emily, the House is back today, and I think it is way, way, way underplayed what the Pelosi scorecard looks like. I believe it's in the vicinity of 219 to 211, depending on the vacancies. And that, and the donkey in the room here is, within every conversation, is the fragility of the Democratic majority in the House. How fragile is it?
I mean, at this point, you've heard many Democrats from across the spectrum, progressives, moderates, individuals in California, New York, and New Jersey, all come out with various concerns about what they're seeing, not only just for President Biden's plan, but also for how things are progressing. In the moderate wing, they really don't want to vote on.
You okay, Emily?
Yes, they want to, the moderates want to make sure that any legislation that they are voting on winds up actually passing the Senate. For progressives, they are pushing Biden very hard. They want a big package, and they say, we heard with just that clip there, they don't want to wait for Republicans to come up with the negotiating. They don't want to have a less from the Republicans. They want to make sure they have the biggest package possible, and they know they're not going to get that with the bipartisan thing they're working on right now.
The pragmatist Pelosi and the moderate Democrats have to deal, as we just heard with Dana over at CNN, with the left and with the liberals. How does Pelosi handle her liberal constituency if things are so fragile?
I think it's a certain degree of knowing where the lines are. What do progressives really want to see in the legislation, and what sort of win can Speaker Pelosi deliver to them? I mean, think a little bit about that $1.9 trillion COVID bill. There was a vote on that $15 minimum wage, gave the progressives the ability to go back to their constituents and say, hey, we took a vote on this thing that we know is a big priority for you. We've shown that we can go ahead and show our support for this. And I think there's going to be a question of exactly what that looks like in this package. I think there's also a big question, if there is a bipartisan agreement, is there then another package that Democrats pass by themselves that includes their priorities? That's something that Speaker Pelosi said over the weekend really needs to be done when she was asked about that bipartisan agreement that those 10 senators had come to, that $1.2 trillion that the White House said they'll work with them on, but we don't really know exactly what the path forward for that is.
Emily, my sense is the gravitational pull in political coverage this week has nothing to do with domestic policy. It has to do all with international, with the G7 and now NATO summit happening today in Brussels. There is a question of Biden diplomacy and how well received it's being at home. How much are people sort of applauding the approach he's taken?
To a certain extent, I think there are lots of people in Washington who are glad to see the U.S. get back onto the global stage, for Biden to sort of reinsert the U.S. as a national leader, working together with other democracies, kind of focusing on individuals and countries like China. And I think there's going to be a big test this week, obviously, when he sits down with Russian President Vladimir Putin. Biden was the one who called this meeting with Putin, and there's a question of what they can get out of it. I mean, Secretary of State Anthony Blinken has already downplayed expectations, saying there's not going to be a light switch moment here. But I think the goal for President Biden is to really head off any sort of future tensions with Russia, to have a moment of strength, trying to say to Putin, hey, the hacking needs to stop, the interference with election needs to stop, giving him a few ultimatums there. But I think for the most part, when you talk about President Biden and you talk about what he wants to do internationally, China is the big actor here, not so much Russia.
I got to say, Romaine, when we hear about China and the U.S., with the U.S. and Russia summit, I have to wonder how much is international and how much is domestic. Is Biden trying to come out and give a strong show of how different he is from President Trump in terms of his Russia policy?
I am, and that's a great point, Lisa. And I am curious about the relationship here, not just between the U.S. and China and Russia, but the relationship that a lot of the other G7 members have with China, have with Russia, relationships that are a little bit more economically intertwined, that they may not necessarily, Emily, be able to give Biden the types of concessions that he wants with regards to being tough on both of those nations.
Yeah, and I mean, this is something where, President Biden's not going to necessarily walk away with everything that he wanted from this trip to Europe, but I think his number one goal was to just reassert that the U.S. is once again interested in being a world leader and playing on the world stage. That is something that we accomplished with the G7 summit, and we'll be looking forward to NATO and seeing, as far as the topics of discussion, what sort of agreements, if any, come out of this meeting.
Emily, thank you so much. To start the week, Emily Wilkins, Bloomberg Government, a briefing from Washington as well. Lisa, I look at the domestic international thing, and I'm sorry, presidents come home. The president's going to come home after meeting with Mr. Putin, and it's that drive from Andrews Air Force Base to the White House where we're home.
Yeah, and the reality sets in of we're home, which is just like that. It's got a lot of weight there.
Oh.
Yes. Okay. I think that going forward, though, it's going to be interesting to see how far the allies get when it comes to vaccine diplomacy. In other words, how much they can get shots in arms, that billion vaccine pledge. That was the big takeaway from the G7 meeting. Now the question is, how do they actually implement it, given the fact that that will be the trajectory of the global economy and how well it recovers?
Romaine, what did you see this weekend in your reading on the equity markets? Are people tweaking? What was the tone that you saw?
I don't know if it's so much tweaking. I think it is weight. Again, I think the importance of it is a lot higher than what it was maybe a few weeks ago. A lot of folks are looking at these valuations, and they're saying that without that continued Fed support, meaning easy monetary policy, you have to reevaluate that. But if the Fed comes out and this does turn out to be a little bit more of a dovish meeting, then I think you could maybe see further gains. But a lot of people, and we saw this last week, who came onto this network, they're starting to expect a much more hawkish tone out of the Fed come Wednesday.
The gentleman from France, for those of you on radio, it is a long blue carpet. We've been making light humor of it today, stretching to Luxembourg, maybe not, but a set almost like an Oscar walk for the NATO leaders. Mr. Macron of France meeting with Mr. Stoltenberg to move towards a photo op here. I think, Lisa, like literally in 15 minutes.
Tom, it's an apt analogy, like the Oscars of politics. I mean, is that all it is, a photo op? And this is a real question. I mean, is this just to give the appearance of everybody kumbayaing together?
I go to, let's talk about a professional, and I'll go to James Stavridis, General Walters, now the U.S. commander, the general of the Air Force at NATO. Stavridis years ago with the Navy, and as Stavridis said, it is a NATO reinventing itself. And you do that with a little Hollywood. That seems to be what they're doing. Coming up, Mustless and on the markets, Robert Tipp of PGIM. Stay with us from New York and Brussels. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Bloomberg Surveillance, Jonathan Ferro, Lisa Bramwitz, and Tom Keene. Mr. Ferro is off. Romaine Bostick is in for John today. The tape a little bit soggy off of the last 90 minutes. We are green on the screen. Now let's call it a red and green nothing burger, 16.0. Actually, Wasabi, the dog that won the Westminster, likes nothing burgers. The VIX, 16.03 on the VIX. It backs up a little bit of tension there. I'm selling this, Romaine. I'm trying as hard as I can. The yield, 146.02. And oil, seriously of note, $73.11. We did not get to $74 a barrel on Brent crude. Romaine Bostick to save the day on individual security selection. Romaine?
All right. Yeah, Tom, thanks. With some of the individual movers today, we really have to start off what's going on with the vaccine companies here. Novavax finally releasing data here from that phase 3 trial showing 90% effectiveness on its COVID vaccine candidate. Says it's on track now to file for approval in Europe sometime in the third quarter. That's about what the street was looking for here. Remember, Novavax has sort of been late to the game here, but Novavax, as well as some companies that also have vaccines already out there, including Pfizer, be able to keep going here. But now we're getting word here that the CEO and CFO have both resigned. They've put in an interim CFO for now and an interim executive chairman. They're looking for a new CEO to take over. But this is an EV company that still hasn't managed to bring its vehicle to market. This is that pickup truck they've been working on. Right now, we'll see how investors react to this once the shares open. But right now, in the pre-market, they are down about 10%. Let's flip up the board here. Just a couple other quick names here to keep an eye on that I want to bring your attention to. Square here, a lot of talk here about Bitcoin, Tom, if you can believe it. Over the weekend, Bitcoin is rallying back to that 39,000, 40,000 mark. Jack Dorsey was pretty active on Twitter, his platform, of course. This time, he seemed to be pumping up the idea that Nigeria could sort of take the lead here in the developing world for Bitcoin adoption. Another tweet by Musk also helping underpin that. Oatly Group shares, they're down fractionally here, initiating a lot of initiations of coverage today. That company, of course, went public last month. Most analysts relatively positive. And keep an eye on WPG, Washington Prime Group. The shares are halted right now. The company did file for bankruptcy protection here. They did get a bridge loan of about 100, debtor and possession financing loan, I should say, of about $100 million. But this company has a lot to work through. Remember, since March, they've been trying to negotiate with their debtors about how they can get out of the situation.
Romaine Bostick on the individual securities markets, and that will fire up here through June and into the earnings season in July. Right now in fixed income, thrilled to bring Robert Tipp in, double-degreed finance out of Berkeley, and just exceptionally acute for PGIM about the dynamics of the fixed income market. Robert Tipp, I look at duration and what pros like you do in buying the maturity out or in the middle, in the belly of the curve, or short term, et cetera. And what we've had is price up, yield down. What do you do now on a duration bet, given the shock move of price up, yield down? And we want to show here on Bloomberg Television and on radio the President of the United States at his first NATO meeting with Mr. Stoltenberg. Robert, what do you do about price up, yield down now, and duration?
Right. Well, you remember where we left off. Last time I was on a couple months ago, yields were soaring. And my comment was that, it's going to be a challenge for bond investors to go through the arc of the COVID recovery because the timing of these markets is very difficult. So growth is soaring, inflation is soaring, yields went shooting up. But, the markets, it's not a paint by numbers exercise, right? The yields don't go up as long as the growth is really strong. The market was already pricing in not only this kind of strength, but it was pricing it in almost in perpetuity. And so what we've seen already is the rotation that we talked about in the bull market in bonds. We're substantially higher in total return than where we left off at the end of 2019. Half of the losses of the bear market, baby bear market, since the end of 2019 have been retraced, and yields are probably still substantially higher than where they will end up in the long run after we're done with the stimulus passing through the system.
Hold on a second. Robert, that's a really important point here. Basically, you're saying we have not yet seen the lows for Treasury yields. They will go lower despite calls for Treasury yields to potentially go higher in the near term based on higher inflation. Please explain.
That's right. We've seen the highs in Treasury yield. That's what I'm saying. That, there's some risk of a twin peak. In the 2009 recovery, we saw a spring 2009 surge in yields, and then we saw another increase in yields early 2010. But then there was the reversion to the underlying secular fundamentals, along with the hangover from the financial crisis that we don't have this time. So you're not going to get that kind of whiplash. But the fact of the matter is, these strong economic recoveries, they create opportunities in bonds, and you can't wait until the economic momentum has crested and turned down. So that's why, if you look back at what we've done over the years, on the papers we put out 2003, 2009, and so on, economic recovery creates opportunity in bonds. That was the rotation that we were talking about at the end of the first quarter from credit to duration.
Okay.
Right.
Robert, then frame out the parameters within we should view Treasury yields. The idea that if we're seeing the highs now of 1.46%, what will long-term yields look like given the disinflationary trends of higher debt and a slower economy just because of demographics later on?
Right. Well, it's not going to feel disinflationary for some time. Those inflation numbers are hot. You're going to have a staggered economic recovery going on around the world for some time. There's still a lot of regions that are really suffering under COVID, as some are coming out of it. And the COVID creates the shortages that make these acute problems and rises in prices in the areas where you are having the aggressive recoveries. So you're going to be seeing the inflation numbers for a while. You're going to be seeing solid growth numbers, but your Treasury yields are probably peaked. Would be my guess in your 180. If we have a twin peak scenario, could we end up scratching towards 2% if it, appears to be incredibly robust? But I'm guessing that, 1.5, 1.25 is going to be more of your central tendency for 10-year Treasury yields looking 12 to 24 months down the road.
How stable, though? How stable are these moves going to be? Or I should rather say, how smooth are they going to be? There's a lot of concern here going forward that the volatility and trying to sort of assess where yields need to be could prove to be more of a disruption than the actual level of the yields themselves.
Right. Well, what we've seen is pretty volatile, a year and a half. And I think that gives you some idea of what's your worst case in terms of volatility. Half dozen percentage point range for your broad bond market. But the bigger risk for investors, honestly, is staying at their strategic allocation, right? For investors that got out at the end of 2019 or that got out at the peak of the bond market at some point in 2020, they had to make two decisions. After the decline in prices, they had to get back in. Otherwise, they lost a couple percent in what's a bond market that maybe is going to optimistically return 3% on average going forward. Does that mean you shouldn't be in bonds? I don't think so. I think investors should be diversified because what are they getting in cash? Right, they're getting zero. And the Fed funds rate peak of the last cycle was 2 3/8, probably be lower this time. So yes, there's volatility, but I think the returns are going to be, fair within that context, and investors that stay diversified at their strategic allocations in their equities, but especially in their bonds, are going to have an increase in return over cash over the long run.
Do you not see any other asset classes, at least major asset classes, that could compete with regards to return?
Well, in terms of return, I think bonds are expected to be in the middle, right, of that distribution between your cash and your equities and your real estate and so on. I would think those asset classes, the higher growth asset classes, should do fairly well. But I think they also have done extremely well, and their valuations are extended, and to some extent are contingent on the bond market valuations. So I think investors that, again, stay in the meat of their strategic allocation, are diversified across these various pockets of fixed income that have value, whether it's your high-quality structured products, high yield, investment-grade corporates even. There's still some opportunities there. Sovereign bonds, both your European peripherals, which are very well supported by the ECB, and across emerging markets. So I think there's a lot of opportunities for investors to capture alpha within the fixed income market, capture the meat of that return profile. Yeah.
Robert, before we let you go, a lot of people blame the Fed and say that Treasury yields are heading lower because of Fed policy. Is that the correct way to look at it, or is this just where the natural yield should fall?
I think all of the central bankers share some blame for this. I think that there are a lot of different equilibriums that could be achieved in the markets, and some places, and I think they have guided the forwards down to incredibly low levels, and it's not as if we have a problem of excess savings in this nation. In general, there's a plurality of under savings. So I think the inflation targeting regimes that are incredibly narrowly focused on these specific measures of inflation, the Fed was a few tenths shy of 2%, and they're considering that to be a failure. I think that kind of fine-tuning of monetary policy that could be keeping rates unreasonably low has a cost in terms of asset valuations and volatility that seem more on the equity side, again, than on the rate side. But the secular drivers are going to keep us somewhere in the zip code that we're in. I don't think the Fed is keeping rates 2-3% away from where they'd be otherwise. Maybe it's 50, 100 basis points.
Robert Tiff, thank you so much with PGIM this morning. Lisa, I'd note that it's a 6%, 7% return on the Vanguard Total Bond Fund versus SPX. Equity markets outperforming by 1,400 basis points per year, going back 3 or 4 years. Brussels is very sterile. There's different parts of Brussels, and there's lovely parts of Brussels. But where NATO is 3 or 4 lanes of highway, not like expressway, but just beautiful roads, with a wonderful headquarters building and 3 or 4 buildings around. It is a fairly sterile building where they will do a photo op of NATO. For those of you on radio across this nation, it is a very important part of the United States projection into Europe and the 30 nations that are part of NATO directly and tangentially as well, as the leaders, including President Biden, greet. Pre-marked spaces spread out, socially distanced on the floor as well, sort of like the way Lisa and I are socially
a lot of blue suits. A lot of blue suits.
A lot of Mr. Erdogan there standing in front of Chancellor Merkel, the gentleman from the Netherlands behind Chancellor Merkel. It's NATO. Our Maria Tadeo is there. She's walked the entire blue carpet this morning. Good morning. This is Bloomberg.
With the First Word News, I'm Rishka Gupta. President Biden tried to reassure U.S. allies today by emphasizing Washington's commitment to the North Atlantic Treaty Organization. At a NATO summit in Brussels, the president said a strong alliance is essential for America as he turned the page on a period when Donald Trump questioned its value. Biden said today he views NATO's mutual defense guarantee as a, quote, sacred obligation. And Benjamin Netanyahu is already plotting a comeback. The Israeli leader was voted out of office on Sunday, replaced by a shaky governing alliance beset by deep internal divisions. Netanyahu issued a pointed warning as he addressed Parliament in his last moments as Prime Minister, saying, quote, "We'll be back soon. The new coalition will govern with the slimmest majorities, commanding just 61 of Parliament's 120 seats." Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andris Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
The curtain will rise again.
Broadway's returning June.
Have you bought tickets?
It's busted out.
You've got more time here.
Commodities are up.
Keep going.
To the moon.
No. Beautiful.
Bloomberg Surveillance, weekday mornings on Bloomberg Television and Radio.
We're getting inflation. It may be transitory, but on the other side of this, we are probably ending up higher than we did during the post-global financial crisis. So we're getting inflation. Some of those components will not be transitory.
Alicia Levine of BNY Mellon setting up the handsome David Wilson here this morning as well. We welcome all of you on radio and TV. John Farrow, Lisa Abramowitz, myself, Mr. Farrow, Romaine Bostikin as well. We just did an important surveillance research item, and we decided Sonali Basak was better looking than David Wilson. So we're keeping David Wilson short today before we go to Sonali holding court down at Goldman Sachs as well. Back on Global Wall Street, and part of it is the sea change we've got in inflation right now.
Yeah, absolutely. I mean, Alicia Levine came out with one view just now about what's happening to inflation. There is. And, you know, Deval Joshi, he's the chief strategist at BCA Research based in London. He figures we've got an inflation bubble going on. And he's concerned that, you know, as these price increases recede, it's going to take down some industry groups in the stock market with it.
Show us a chart right now.
Specifically, industrial companies and raw material producers. And he had a more elaborate version of this where he put together an index that was half of each of those groups. But either way, I mean, he compared it with the 10-year break-even rate here in the U.S., the whole idea that that's a market-based inflation gauge. And so you can see in this particular chart that MSCI World Indexes, so he's looking at developed markets for industrials and materials, have moved along with this break-even rate. And if that goes down, so do the stocks in his view. He cut his rating on them.
Okay, too short today. David Wilson, thank you so much there on the idea of what we see off the Fed meeting on inflation. At Goldman Sachs, they will be watching the Fed meeting on Wednesday. So will Sonali Basak. She's holding court in front of Goldman Sachs today as they reopen on Wall Street. I'm not going to mince words, Sonali. All of New York Wall Street watches this moment. How will the other firms react to what Mr. Solomon is doing?
Yeah, it's a great question, Tom, because we've certainly heard that some firms are taking notes and watching how many people come back, what the concerns may be, and also whether they should reopen sooner. A lot of firms are not planning to fully reopen until after September. We've even heard of some firms letting some employees work remotely or partially remotely until next year. But over here at Goldman Sachs, everybody is asked back to work with some exception, but really 5 days a week is back to the normal.
What was your week? Come on, Sonali. I know all weekend you were talking to Goldman Sachs people as they complain. How complaining are the people complaining this weekend about the return on Monday?
Well, what's interesting, too, I mean, some of the people have already been here for the last year, right? So for some people, this is not a big deal at all. It's part of the culture of Goldman Sachs, actually, Tom, right? I mean, it's funnily, today, you have David Solomon, the CEO, traveling, meeting clients. So it's been back to normal for some time. Some things that are not so back to normal for Goldman, there's free food. There'll be music outside throughout the week.
So that's why you're down there. Okay, Lisa, we got it there.
Honestly,
Lisa, can you imagine what a Goldman Sachs breakfast is like? I mean, how gourmet is gourmet?
I think probably people would say the same thing about our Bloomberg breakfast. There is a question, though, Sonali. I don't think that you opted to stand outside the blaring horns. And the blaring horns are a sign of just how much people are trying to come back to work and come back to work in their cars, not necessarily using public transportation. Is there a sense that there is gridlock or just sort of a scramble to figure out how to get back if people don't feel safe yet using public transportation?
Certainly, the public transportation is a big part of this, Lisa. As you know, a lot of people don't live in New York, right? Safety has to come first. Interestingly, some of the new rules at Goldman, if you're vaccinated, you don't need to be wearing a mask. But if you are not vaccinated, you need to be wearing a mask at all times. So it will be interesting to see how that pans out over the next couple of weeks. Yeah. When it comes to travel, you know, it's just, we'll see.
Yeah. So, Sonali,
it's already crowded, as you can see.
Yeah, we can see that. And thank you for doing yeoman's work out there in the rain there. I am curious here, Sonali. I mean, Goldman, obviously one of the bigger banks out there. A lot of other banks, I would assume, are going to be keeping a close eye on how things go with regards to the return of the bankers there. What do we know about some of their competitors out there? What are they doing?
Yeah, like I was saying before, some of them, like Citigroup, for example, which is really just blocks away from here, is waiting for a more full return to office in September. After Labor Day is really supposed to be the big moment for everybody. It's not just the U.S., by the way, right? We know that Goldman is planning to open its UK offices for everybody next week, in the next week or so. So they are watching the U.S. reopening very closely. Of course, this is the biggest office. This is the headquarters. But this is, again, remain happening across the entirety of the United States, where there are different rules and also people with different risk tolerances about coming back to work.
Right. Shonali, there is a question of how this is being received. You've got certain tech companies coming out and saying, you don't have to ever come back full time. We are very much for flexible work arrangements. And then you have others saying, come back to the office. Is the office model considered old economy, or is it welcomed by the younger workers as a way to build culture and build job security?
It's so funny you ask that, because right now we are standing right outside where all the interns are being greeted into at Goldman Sachs. So a lot of hugs, a lot of high fives that you're seeing. And it's a very different vibe, right, than you would see from the people who are not here, people who are perhaps having more trouble with childcare or other concerns that are in regard to COVID, right? So that question of the younger banker, we've heard time and time again, older bankers are very concerned about the training that their younger talent gets when they are working from home. Hard to know. There's 2,000 interns being welcomed back to Goldman Sachs across the United States today and across the world.
Shonali Basak reporting from Goldman Sachs down in the financial district. Ms. Basak will continue her team coverage with reporting from the Dead Rabbit tonight. We're looking forward to that right now as well. How come we don't get these gigs like Shonali? You know, I don't.
Okay.
I just want to see the internal workings of your thought process, Tom. Yeah. Like he's watching Shonali and then the Dead Rabbit. You're picturing it live.
You know,
is that
drinks? You know, right.
Well,
you take your cell phone.
You can go down there and broadcast later tonight.
We should do a remote from
Surveillance After Dark.
Pro tip: radio and TV. You have a Bloomberg terminal on your cell phone. Okay.
You do.
Good. So you go, oh, Al, look where Euro sterling is. It's terrible. Can you use more Campari this time? Thank you, or something like that.
What was that phone case you held?
Works as well. That's,
Going back to the work from office aspect, I think that it's really interesting to see how this shakes out, whether people think it's valuable or whether people actually do want to be home more and have gotten adjusted to having a more home-centric life. I don't know the answer.
Well, one thing that'll be interesting, too, just the fight for talent. I mean, there's been a lot of fight for talent between Wall Street and finance and, of course, a lot of these tech companies. So it'll be interesting to see how sort of, I guess, the approach to the return to office maybe affects recruiting down the road.
Oh, I'm going to stay out of this discussion as well. What a shock. I may have an opinion on this.
Just say it. There's no one watching. It's just us.
Look what we've been doing.
Go ahead.
You know what I want? I want all of us in the same room. You, me, David Wilson, Shonali, everybody.
It's a small
all in a, big ginormous desk like that blue carpet at NATO, and we are the world. Da da da.
I was waiting for some singing. It definitely lent itself to that.
It's a mixed market. Fed Day on Wednesday.
We've sadly lost 12,000 premises across the sector as a whole. We lost about 330,000 additional staff in terms of headcount through the pandemic. It is a gradual road to recovery, but I am feeling much more optimistic. The positive response we've seen from consumers in returning to eating and drinking out, even outside, has been very welcome. And of course, we're not out of the woods yet, because we know that about 20% will struggle to reopen with social distancing restrictions, and every day that they are closed makes it less likely that they'll be able to reopen. So I think you will see continued business failures within hospitality over the course of the next year. Well, I think the government support has been unprecedented. Equally unprecedented is the hit that hospitality has taken. So we do need the government to look at a solution on rents, which is going to be critical to recovery, a recapitalization strategy to tackle the levels of debt that these businesses are going to come out of the pandemic with. So this government support, fantastic, has allowed us to maintain a large number of staff that we would have undoubtedly lost along the way had we not had furlough. But furlough actually is costing the businesses to implement at the moment, and the costs of staying closed, the industry is burning through £500 million a month in ongoing costs.
Bloomberg surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Ferro, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
If there's anything we've learned in the last couple of months, it's that you can't just turn on a switch and have the economy come back online.
Low inflation, low rates, positive economic growth, and strong earnings, that's a pretty good backdrop for risk-taking.
The situation that would be the worst for the sort of 60-40 portfolio is if we start to get, rates go higher.
The Fed has successfully lulled everybody to sleep with the Kool-Aid that they are never really going to focus on inflation.
The question is, what risks are most important to the Fed and what risks are most important to the world economy?
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Countdown to the Federal Reserve on Wednesday. Good morning. This is Bloomberg Surveillance on radio, on television. Tom Keene, Jonathan Ferro, Lisa Abramowitz, John Ferro off, Romaine Bostick very much in. And Countdown to the Fed seems to be the theme of the week, Tom. The question here is whether we get any hawkish rhetoric. But perhaps the bigger question is just hurry up and wait for a certainty that just isn't going to come for months down the line.
I'm going to swing even farther away from that, Lisa. I'm going to go to the land of Romaine Bostick. And that is, to me, the massive mystery here will be not only the earnings season, but the reset to Q3 and Q4. Lisa, I look at Q3, Q4 as a complete total mystery. Everybody on Wall Street will be listening to those corporate reports.
Yeah, and Romaine, in the meantime, that's why the stock traders are very much looking to the Fed, because there's not a lot of other data. Yeah. Earnings have kind of slowed down. I mean, what's your view on how sensitive stocks are at this point to a Fed that could talk about tapering?
Yeah, well, it's interesting. I mean, obviously you saw us sort of crawl to that record high last week, but it really was a crawl. There are a lot of traders right now and a lot of investment strategists who are saying we could see a little bit more of a hawkish tone, and that you need to kind of position for that potential here. But I mean, you go back to what we just heard from Robert Tipp in the previous hour here, and this idea that if yields do have effectively peaked for the year and are going to stay mired below 1.5, then that maybe adds a little bit more impetus for folks to maybe take a little bit more of a leap out onto the risk spectrum.
Yeah, and Romaine, you and I were talking in the break, what Robert Tipp said, and Tom, I want you to weigh in on this. What Robert Tipp said, that we could see already the peak of Treasury yields, that it could be destined lower from here. And yes, this has to do with the Fed, but it also has to do with demographics. Yeah. What does that do to stocks? I mean, that pushes them higher. What does that do to the rest of the asset market?
Well, what it does is it surprises people. I'm really glad you picked up on that, Lisa, because Steve Major at HSBC and others looking for lower yield. David Rosenberg, I'd lump in there as well. And, you know, the gradations here, folks, don't really matter. But there's such a zeitgeist to higher yields that when you hear somebody as esteemed as Tipp say that, Lisa, you stop dead in your tracks.
Yeah, especially when you've got the likes of TD Securities and JP Morgan coming out and saying, don't give up, keep trying to short bonds. I mean, at this point, Tom, you got to wonder, this is a pretty bifurcated camp here. Yeah,
let me do the data check right now. It's red and green on the screen. We had all green earlier, and we've given up a little bit of that, but I don't want to go too ginormous here. Futures up 2, Dow goes the other way, negative 31. VIX can't get out of its way, 15.94. In the yield space, as they call it, we were at a 146. We come down to 145 handle on the 10-year yield. I would note real yield, negative 0.90 speaks volumes. And also oil, we didn't get out to $74 a barrel. Let's dive into this right now. On a Monday reset, as you reset to get to 4th of July, we're watching the affairs in NATO to bring you up to speed there. Excuse me, I'm gasping over the length of the carpet. To talk of NATO, we had the photo shoot. We had the meet and greet that looks sort of Hollywoodish, to say the least. And maybe now we go into individual discussions to be had in NATO, bilaterals, as they call them. The president meets with Mr. Putin out on NBC in the last number of hours, making for some very tough language there on how he sets up his meeting with the president of the United States. Tough language now from Brian Nick of Nuveen as we try to get out of our way on the market. Brian, how do you frame it? I mean, Nuveen is known as a bond house, but you do a lot of equity as well. How do you frame the mystery of Q3 and Q4 earnings?
Yeah, we're actually just starting to write about this for our mid-year outlook.
Well,
and I think the key here is how are things going versus how is the market expecting them to go? So the first half was all about exceeding expectations, earnings beating expectations, economic data beating expectations, vaccinations and the vaccines themselves being more effective and more widespread and distributed than expected. I think now we're getting to this point where the markets and the economy overall are starting to just merely meet expectations. And that's why you've seen a bit, I think, of a tapering back in the 10-year. I think you've seen a bit of a flattening out in terms of the pace of increases in the equity markets and about the pace of sort of the narrowing in spreads in the credit markets. Everything has sort of come to not quite a crawl, but maybe something, asymptotically approaching some equilibrium level until we get new news. How is the second half of the year going to go? I think obviously what we're expecting is fewer surprises than we've gotten in the last couple of quarters from earnings season. And that probably has, some relation to what's going on in the bond markets as well, with the 10-year having come off, and with the Fed, I think, is expected to remain quite dovish on June. I think in the June meeting, I think if they say anything hawkish, it'll be a mistake.
So, Brian, give us the distinction between successful and beating expectations and disappointing expectations. Is it companies that have pricing power that can raise prices on consumers to meet some of the supply chain disruptions and the higher commodity prices? Or is it simply being big tech and everyone needing an iPhone?
Yeah, that's certainly the pattern we're used to, right? When the rest of the world is sort of decelerating, that sort of tech's moment to shine. And every time we've seen interest rates come back at the same time as earnings have started to decelerate back or maybe not beat as reliably, that's been a really good time to be in tech. And so we've been pretty neutral between the ultra cyclical deep value and then the sort of the higher growth defensives. We're kind of spread out across the board there because, again, we're obviously, leaning into the uncertainty a bit, but also looking for a pretty, sharp and noticeable deceleration in economic growth in the U.S. Overseas, though, I think we're still waiting for peak economic growth. We're waiting for peak growth in Europe, the UK, later in the year, Asia, and emerging markets as they get themselves vaccinated. So there could be a bit of a rotation here as investors look for where are we still seeing the news beating expectations. They could be looking outside the United States.
Brian, are you concerned at all here, I guess, about the inability to, I guess, properly forecast some of the economic trends out there? We're starting to see a lot more sort of, I guess, surprises, if you will, at least as far as what certain economists and certain strategists on the street are expecting with regard to some of the economic data points, not only here in the U.S., but really overseas as well. Do you think that that could end up creating a little bit more volatility as we go forward?
I think certainly outside the U.S., we're still seeing most of the data coming in better than expected. I think if you've got an economic model that's worked for the last 7 recessions, it probably didn't work very well for this one because it's more like a light switch getting turned off and turned back on. So most of the data, especially with all the stimulus, with the vaccinations being this completely, unique variable to this recession, I think that has caused a lot of the economic forecasting to be, too low. And I think we're starting to see that overseas more as well. In the U.S., we've actually seen the surprise indexes that we track coming back down to close to neutral. So it's just the housing market is, showing signs of maybe just cooling off just a bit. Consumers not going to be as hot without the stimulus moving forward. It should be easier to forecast these things once we get all these kind of strange and unique variables out of the way.
Brian, the calculus off of pre-pandemic is Standard & Poor's 500 up 35%, sort of a blended bond event up 3%. You made the coupon and a teensy-weens bit of total return as well. Are people worn out with fixed income? And I say this with immense respect with what Nuveen invented across America in the packaging of unit trusts. Are we worn out from bond returns?
Well, I think what we're telling clients is that you should be diversifying into higher yielding or just non-correlated parts of the fixed income market, because whether or not interest rates move up from here, it's going to be tough to make that 3.5% again over the next year with a traditional bond portfolio, given how low yields have gotten. And if they're moving higher, it's going to be even tougher to do that, as we expect they will over the next year, 2 years, 3 years. So what we're looking to set people up with instead is things like the high yield part of the municipal bond market, emerging market credit, where we still think there's value, and anything that's sort of less correlated to rising rates or less susceptible to rising rates. So anything like in the loan area, senior loans, floating rate securities, where you could be building in a little bit more protection against that rise in rates that ends up knocking a lot of things off the board.
Brian, Nick, thank you so much. With Nuveen this morning, their chief investment strategist. And Lisa, what's so important about that 3% bond return? That's triple leveraged all cash fund.
Well, yeah. I mean, that's the issue here, is that how do people get returns if things are where they are right now?
It's brutal.
And, I was thinking about that. Just going back to Robert Tipp's point, what do the pensions do?
Yeah.
Well, that's why you get the $7 trillion private asset complex probably going to $13 trillion if you go to 2025, if you believe Morgan Stanley.
I could go on this all day. Romaine Bostick, I look at the actuarial assumption, the responsibilities long duration managers have, and it is brutal. I got a heartbreaking note from one of our viewers and listeners this weekend about where they are down to just survival spending because they're in bonds. They're comfortable in bonds, and it ain't working.
Yeah, they're comfortable in bonds, but I mean, look, a lot of them have started to look elsewhere. I mean, they're obviously have a lot more constraints than your average fund out there, but they have to look elsewhere, Tom. And we've heard time and time again from folks who manage some of these pension funds that there are returns to be had, and if they can sort of get their boards to maybe loosen up a little bit, they can go after them.
The concern here is how far into risks you have to go to get returns, and then the idea that there's a big political pressure.
How much risk is there?
Right. Well, the idea of that's another question, and it's a good question if you've got a Fed backstop. But if there's a downturn, then stocks aren't going to do that well. If there's an actual economic downturn, but on the flip side, you have to think about the political pressures. If they still have an actuarial assumption, Tom, of 8% at a time of sub 1.5%, 10-year Treasury yields, that's a problem. They're going to have to adjust either what they pay out or how many taxes they bring in.
8% is an artifact from the past. I would suggest a lot of people are at 6%. And what I look at, guys, is the London actuarial assumption on annuities, which I was stunned, and I haven't kept up with it, but it was 4.1%.
Wow.
A year or so ago. That's not an 8% actuarial assumption.
No, and I think that's realistic at this point.
Yeah. Well, we will have to see. It's time, of course, for obligatory dog video. This works on radio
It's great.
The Walking of the Pekingese on radio. This is an annual tradition we have on radio to look at the Westminster Dog Show. The late, great Ken Pruitt, every year he bought a different dog. By the time Ken died, he had like 7 damn dogs. He had a Springer Spaniel. He had a Cocker Spaniel. He had, a Pekingese. What do you do with a Pekingese? You put it on the couch?
No, well, you win the Westminster Dog Show.
It's a couch cushion. It does look like a couch cushion.
It does.
It's an expensive dog there.
With the First Word News, I'm Ritika Gupta. President Biden tried to reassure U.S. allies today by emphasizing Washington's commitment to the North Atlantic Treaty Organization. At a NATO summit in Brussels, the president said a strong alliance is essential for America as he turned the page on a period when Donald Trump questioned its value. Biden said today he views NATO's mutual defense guarantee as a, quote, sacred obligation. Vaccine maker Novavax says its shot was highly effective against COVID-19 and also protected against variants in a large late-stage study in the U.S. and Mexico. The company says the vaccine was about 90% effective overall, and preliminary data showed it was safe. While demand for COVID-19 shots in the U.S. has dropped off dramatically, the need for more vaccines around the world remains critical. Electric vehicle maker Lordstown Motors is losing its 2 top executives. The startup said today that Chief Executive Officer Steve Bernsan and Chief Financial Officer Julio Rodriguez have resigned. The departures are the latest setback for Lordstown, which warned last week it might not have enough cash to fund development of its first truck or even survive the next 12 months if it can't raise more capital. The UK won't be coming out of its pandemic lockdown just yet. British Prime Minister Boris Johnson is expected to announce today that he will not lift England's virus curbs for up to 4 more weeks amid concerns over a rapid rise in COVID-19 cases. A delay would deal a blow to entertainment and hospitality businesses that have been closed or operating under tight controls during the pandemic. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
crypto is a nuanced issue, and it's possible the U.S. gets crypto wrong.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
Trading revenues coming in better than expected. Everything. Cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
I think he's right. It's a low point. But this is not a contest about who can do better in front of a press conference or try to embarrass each other. It's about making myself very clear what the conditions are to get a better relationship.
The President of the United States in Cornwall, now in Brussels, and of course on his way to a conversation in Geneva with Mr. Putin tomorrow. We've seen the pageantry of NATO this morning. Jonathan Ferro, Lisa Bramwitz, and Tom Keene. Mr. Ferro is off. Romaine Bostick helping us out this morning. Right now on American politics, we go granular with Gregory Valliere. He has a tough life. To the south of Switzerland, up in the Alps, lost with some St. Bernard somewhere on his way to Milan. He is leading the way to American tourism in Europe. Greg, very quickly here, should Americans travel to Europe? You're leading the way.
If you've had your shots, if you have been tested recently, yes.
Okay, we'll leave it there. Greg, let's go. There's too much going on. I want to go to a great NPR thing I heard on Tennessee, which is the distance between Memphis and Nashville, where the Democrats of Memphis, the Democrats of Nashville in the 5th and 9th districts get gerrymandered out, and this costs the Democrats the House. How many of those battles are there out there now to give Speaker Pelosi some serious angst?
If forced to make a wager today, Tom, I think the House falls to the Republicans in 2022. The history would indicate it. The redistricting would indicate it. Some important Democrats have announced their resignation. I think the Republicans are favored.
The Republicans are favored. What kind of Republican House would it be? Would it be fragile and of gridlock?
It would be fragile. I think that McCarthy is going to have his hands full with people who are don't owe him anything. But I think you'd get gridlock, Tom, in the last 2 years of Biden's first term.
You know, Lisa, this is really important. It's the first real conversation we've had about a majority GOP in the House.
Yeah, the idea here of what happens if the Democrats can't go it alone, and how much urgency is there behind them to get something done before the 2022 midterms. Greg, what is your sense of how likely it is that we see some sort of deal, whether bipartisan or partisan, by next year, given all of the hurdles and the divisions within the Democratic Party?
I think only one of the three, Lisa. You'll get something on infrastructure. It sure as heck isn't going to be $2.25 trillion. It'll be much, much less. The other two are in trouble. The $2 trillion for social programs is on life support. And then finally, the third one, a big tax hike, I think is also on life support. There might be a little on the very wealthy and big corporations, but a grandiose tax hike that Biden wants, I think is in real trouble.
In the meantime, there does seem to see some unity when it comes to Republicans and Democrats on the international strategy, particularly with respect to China. And I'm wondering whether the President Biden's tour internationally this past couple of weeks really gives light to how far apart the U.S. has gotten from European allies when it comes to what exactly they should do with respect to China.
I think Biden sort of got what he wanted from our allies on China. I think we are demanding more transparency on the virus. We are demanding that they treat their dissidents better. We're demanding that they stop hacking into our companies. So I think on a lot of these key issues, there's not a lot of space between us and European allies. We're all united in opposition to China right now.
Do you think, Greg, that some of those allies have the same cushion, the same wiggle room, I guess, to push back against China in the way that maybe the U.S. has?
Good point. I think the U.S. is more adamant. The Western Europeans have other issues, including Putin, of course. But I do think that, again, Biden got in the communique what he wanted. He didn't get everything. We still can't decide what we're going to do with coal. He and Trudeau did not agree on opening up the border with Canada. But I'd say the first part of this trip has been a great public relations success. I think Biden's numbers, his job approval numbers, are headed higher.
Do you think, though, I guess some of the international gains that he may be making on the international stage, that actually translates to the real people on the ground here in the U.S. with regards to his popularity and the likelihood that they may vote for him or at least his party again?
Oh, fearless forecast. I think within a week or two, Biden's numbers will be a little over 60% positive. That gives him political capital. He's going to need it to get much done on infrastructure. I think we're several weeks away from ironing out any kind of deal on infrastructure. So he needs that high approval number to help his cause.
Greg, one final question here. We've got to get back to the markets and what we're seeing at NATO is well, in this political maelstrom, we seem to be back to normalcy. Can you say that Mr. Biden has dragged us back to a diplomatic and domestic normalcy, or is the jury still out?
It's a huge point, Tom, and I think the answer is yes. You know, whether it was Macron or Merkel, they all pretty much agree. The U.S. is back. There was a goodwill, good spirit between all the leaders. Obviously, the Putin meeting isn't going to go great, but I think with our allies, there's a sense that after these 4 horrible years, things are returning to normal.
Very, very good. Greg, thank you so much. Greatly appreciated this morning. Mr. Valliere joining us from the Alps of Switzerland on his way to Italy, which is maybe the best news we've said in 18 months. Brave to go over to Europe and begin the tourism grand tour. Mr. Biden on a grand tour at NATO. And Lisa, I'm looking here at a bigger, rounder table. And one of the things we didn't mention, it was on break when Mr. Erdogan arrived. Erdogan, a member of NATO, is a separate story and folds right into the discussion of Russia.
Yeah, and President Biden's going to be meeting with Erdogan, I believe, later today. It'll be interesting how he tries to shore up some alliance between the two in preparation for that Wednesday meeting with Putin. I will just say, Tom, you think it's brave to go to Europe to be a tourist, so that means you'll applaud my efforts, huh?
Yeah, I will. I think it's a very,
Where's
this
Lisa
is
going?
a big, you know, we're all coming out of this pandemic.
Never coming back.
And well, you know, we're all coming out of this pandemic, each in our own ways. It was fun. I was out this weekend for the first time in, you know, I'm going to say 14 months. And, you know, there were some real emotional hugs with people that have essentially been unemployed for a year. I mean, there's no other way to put it.
Yeah, absolutely, Tom. And I was out and about in the city. I'm getting on a plane in a few days as well. Yeah. So, you know, a lot of us want to get back out, but still some caution here. But, you know, some of us, we're going to get to see our family for the first time.
Entering the NATO room
15
now.
months,
yeah,
Tom.
absolutely. Entering Mr. Stoltenberg, the former Prime Minister of Norway, to lead this NATO meeting, his tour of duty through 2022. We see Boris Johnson there, the Prime Minister on radio, recovering from Cornwall. Recovering from what appeared to be a very successful event. Very quickly, Romaine, I want to make note of the low yield shift seen in the percent move of the NASDAQ 100.
Yeah.
The NASDAQ 100 very fractionally, small tea leaf, leads the way today.
Yeah.
And that indicates that low yield feel.
Yeah, and this is a slow crawl that we've been seeing now for the past couple of weeks here. We're up about just about 0.3% on NASDAQ futures, less than that on S&P futures. But again, with this yield environment right now, you're going to see some people maybe start to say maybe long duration in equities is still there.
We welcome all of you worldwide and across this nation on Bloomberg Radio and Bloomberg Television. We will continue an eventful week tomorrow. Retail sales onto our special coverage of the meeting of the Federal Reserve System and the FOMC. We'll do that Wednesday at 1:30. This is Bloomberg.
announcing a project and doing a project is something different. And that's why we are so proud. We have started now the first one here. It's running, and I believe that we will see scalability. We have now a base to show use cases, so we can develop new cases on how to build a hydrogen economy.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Bloomberg Surveillance. Good morning, everyone. Jonathan Farrow, Lisa Bramwitz, and Tom Keene on radio, on television. An eventful Monday. You don't see it in the market. Market pretty quiet here. We do note Brent crude out to a 73 handle, $73.36 on Brent crude. But there it is. To save time now, I'm going to do the data wicked quick here. Wicked is what they say in Boston. Wicked is what they say on Martha's Vineyard. Euro dollar 121.16 as well. The yield there just under a 146. Let us not save time. Lisa and Romaine, let's get right to Michael Darda, MKM Partners, here to set up the economic week, and he joins us from an island somewhere vicinity south of Cape Cod. Michael Darda, Martha's Vineyard, you're living it out there. Wages, lack of labor, lack of housing. It's a real-time microcosm of what we've got worldwide. Are we going to see wages rise and stay elevated?
Well, Tom, we are seeing them rise, and certainly out here on the vineyard, you can see these supply-side disturbances that have been holding back job growth over the last few months. We're way out in the westerly, sort of a remote part of the island
my
here.
Heart bleeds for you. It's terrible.
There are only a couple options in terms of restaurants where we are, and none of them are open for indoor dining, and it's not because of COVID. It's because they cannot find employees, staff. And so it's essentially a takeout situation, or you can sit down and eat there with no staff.
God, so. Lisa, this is he's just killing us.
I'm crying.
Michael, get out the grill, play the Gorilla album from James Taylor, and move forward. Okay, let's look at the national situation now. Michael Darda, do you believe in a sustained GDP? I mean, looking at the top level and linking in nominal GDP to where we are, do we misjudge the sustainability of this economy to boom?
I think that's exactly what's happening, Tom. We are in a boom. There are some supply side dislocations that are a bit confusing, but I think growth is going to be quite strong, well above potential next year. And that gets us to this question about inflation and whether it's temporary or potentially more permanent. Some of these price spikes are going to be temporary. You're not going to see used car prices going up 7 or 8% every single month. But there are other prices that are stickier, that are slower moving, that haven't even gotten going yet, that we could see start to move next year if we stay in this really robust nominal GDP environment. Milton Friedman posited the relationship that monetary policy eases first, so money gets going. Within a few quarters, you see output move. And then in terms of the lag on inflation, inflation is backward looking and slow moving most of the time, and that could be a few years. And we're already seeing inflation from these supply side shocks, but the demand side element, I think, is going to be a bit more persistent than widely expected.
Lisa, that is the first time in the history of the People's Republic of Martha's Vineyard that you've heard the name Milton Friedman mentioned on the Grand Island. Never happened before.
All right. Thank you for the Bloomberg exclusive, Mike Godarda. We appreciate the mention of Milton Friedman on Martha's Vineyard. Going forward, how do we know, though, this idea of sticky inflation? When will we know, given the fact that people have pointed to wages, and we see wages going up, but people even dismiss that as transitory?
Yeah, no doubt about it. Well, we know these flexible prices are rocketing, and those are going to be the first to respond, but they will respond both to supply side and demand side shocks. The stickier prices within the core tend to be more slower moving, and you have a lot of monetary policy officials now that are in the temporary and transitory camp looking at median, trimmed mean prices for these different indexes, whether it's the median prices for the CPI or the trimmed mean for the PCE deflator. So we're getting a bit into the weeds, but these are slower moving price indices that will tend to respond over time. And so those areas, I think, next year, if they start to get moving along with higher inflation expectations, then that's going to probably get the Fed's attention in a way that some of these price increases this year have not.
Well, let's just zoom out a little bit. The balance of risks right now, is it to much higher yields or, frankly, to lower yields and poorer performance in equity markets should the reality of slower growth actually set in after this inflationary bump?
Yeah, I think the risk is to higher yields from where we are right now. Our forecast for year end is 2% in the 10-year Treasury. So recently, we ran up to the 170s in late March, and we've pulled back. That pullback corresponded perfectly to a few months of disappointing job gains, that we were seeing pressure on wages, pressure on hours worked. So these supply side disturbances holding back job growth. So if we see job growth accelerating towards those 7-figure thresholds, then I think you're going to see bond yields moving back up towards the highs of the year, and then potentially even higher. That's our view. Obviously the market will decide, and the market has been going the other way on yields for the last couple months here. But I think that's really what turned the tide. I think you had a lot of bearish sentiment in the bond market, and it just took a couple weaker than expected readings on jobs to trigger a rally. And I do think that will reverse over time if job growth accelerates as some of these supply side pressures ease up. And we can go through what those are, but that's our view.
Yeah, there's certainly a lack of consensus right now with the way things are being priced. Maybe you can go through some of those additional pressures here, particularly against the backdrop of whether there is, I guess, distortions in this market by Fed policy, and whether the data themselves maybe leads to further distortion.
No doubt about it. So on the job growth angle, we have some issues from extended unemployment benefits. And so, that's increased the reservation wage, the so-called wage that would call someone, off the couch or, waiting at home for a better opportunity to get back involved in the labor market. There's also been some hesitation on the part of the public in terms of risks to, interfacing with the public. I think those will be easing back now as a bigger percentage of the population is vaccinated month over month over month, and we've had a problem with schools being closed and parents dealing with issues with respect to childcare. So all of those things should be improving over the course of the months ahead. I mean, we already have half the governors scaling back the jobless benefits, and then these will start to roll off completely in the fall. Schools are reopening, and we're doing pretty well on the vaccinations, and so I think a lot of these issues are going to recede that have been holding back job growth, and we are accelerating now on job gains. And so we're getting closer to the Fed starting to think about talking about, and then start talking about the taper.
Yeah, there's definitely going to be a lot of talk.
I look so forward to the Fed meeting on Wednesday.
All right, then let's circle back then, Mike, to, I guess, then the wage issue here. And the idea here that some of the issues that we're having right now in the labor market are causing an increase in wages. I guess that's a good thing, depending on what side of the fence you sit. But there's some concern here that is definitely, I guess, the sticky part of the inflation debate right now, and that even if we do get some sort of right sizing in the labor market, those wage gains are still going to be there.
Yeah, I think they're still going to be there just because this is a booming nominal demand backdrop. And so we had a huge and sudden collapse in the economy, last spring. Nominal GDP since then has been growing at an 18.5% annualized rate. So all nominal magnitudes should be moving up pretty rapidly, and wages are certainly a part of that. They're a sticky part of it. But yeah, I think these wage increases are going to stick because the labor market's going to be tightening month after month. And you've got record job openings, a record quits rate. A lot of these leading indicators like first-time jobless claims collapsing, very bullish for a tightening labor market, and suggesting the Fed's probably a bit behind the curve here.
Michael, the money question here, and all the time that you and I have gone back and forth on this, is does the geometry we learned still work? And if we go to, Jude Wanniski and others studying the ISLM function of Hicks from years ago, does that traditional geometry work now? Or do you just anticipate at some point out there we'll get back to what's in Michael Spence's textbooks?
No, I think that I think the basic models can help us think about shocks. We wrote about that last year. But the essence of where we started with this Milton Friedman idea that, monetary policy operates with lags, and then you first see an easing show up in output, and then, inflation follows because it's stickier and tends to be a lagging indicator. I think we already see that playing out, and that would suggest more permanence to some of what we're seeing, rather than this very temporary, transitory, base effect type nature, which is what the official company line, if you will, is right now.
And of course, Michael, what is so important is on Martha's Vineyard, there is only one metric for summer pricing, and that's the price of propane for the grill. I mean, folks have no idea what it costs out on these islands to get propane. For those of you on radio, an action photograph of Michael Darda. This grill, Lisa, went to the moon.
Is that what we're focusing on?
That's
the grill?
not what I'm focusing on.
Are we focusing on the grill?
Really? Socks and flip-flops? Is that a thing, Michael? Really?
How did you guys get that photo? That is not ready for prime time.
It's coming from inside the house, Mike.
Michael Darda will be out for dinner tonight. Thank you so much, Mr. Darda, from MKM Partners, holding court out on Martha's Vineyard this year. Lisa, I've never worn socks in
flip-flops.
The whole point is that you put it through the toes. It doesn't work.
Do you own a pair of flip-flops, Tom?
No, but I'm in the acquisition mode. To be honest, like everything else in America. Yeah. The ones I looked at are sold out and gone.
We will follow through with the heated flip-flop debate coming up on the Open. Kate Moore, I'm sure, really wants to weigh in on this. I'm sure she is eager.
With Kate,
of BlackRock. Yeah,
seriously, Lisa, with Kate Moore, you have to extend the obligatory dog moment with Kate Moore.
Yes,
I think Kate Moore screams she needs a Pekingese on
Yes,
the couch.
we're gonna have lots of dog talk and flip dog talk.
Yeah.
In all seriousness, so we are going to drive the conversation forward with respect to whether this Fed meeting is important. Paul Tudor Jones actually on the Dark Star. What do you call them again on CNBC?
Death Star, yes.
Talking about that the market has become bat-esque crazy. That's not exactly what he said. And he thinks that this Fed meeting could become the most important one ever.
Kate Moore, on the many people that have been left behind in this massive bull market. Futures Mix this morning. Stay with us on radio, on television. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. The U.S. is approaching 600,000 deaths from COVID, even as new fatalities, infections and hospitalizations continue to plummet nationwide. The vaccination drive has slowed significantly, but the country is largely reopening. Daily deaths have fallen from a peak of more than 5,000 in February to an average of about 300 over the last week. President Biden tried to reassure U.S. allies today by emphasizing Washington's commitment to the North Atlantic Treaty Organization at a NATO summit in Brussels. The president said a strong alliance is essential for America as he turned the page on a period when Donald Trump questioned its value. Biden said today he views NATO's mutual defense guarantee as a, quote, sacred obligation. Russian President Vladimir Putin is sharply dismissing allegations that his country is carrying out cyber attacks against the United States as baseless. In an interview on NBC, Putin said, quote, it's becoming farcical. When asked about the poisoning of opposition leader Alexei Navalny, Putin said, quote, Russia isn't in the habit of assassinations. Putin is due to meet President Biden in Geneva on Wednesday. And the American father-son duo charged with helping former Nissan Motor chairman Carlos Ghosn flee trial pleaded guilty in a Tokyo court today. Michael and Peter Taylor were accused of helping Ghosn escape Japan in late 2019, where he was facing charges of financial misconduct. The former auto exec smuggled himself in a case for audio equipment and boarded a private jet, eventually making his way to Beirut. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there has been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andris Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America. BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Bloomberg Surveillance. Good morning, everyone. Romaine Bosca and Tom Keene. Lisa Bramwett's getting ready for John's property at 9 a.m., the Open as well. The markets are mixed this morning. The VIX 15.94. We note oil elevated, and I note also we don't have imagery of it for TV, but for radio and TV, I can report that Mr. Netanyahu in Israel greeting other members of this new coalition, an historic moment for Israel. We'll have much more on that through the day. Right now, and we've been looking at the mayor's race in New York. For those of you worldwide, there's like 3 Republicans on the island of Manhattan. Scott Stringer knows all of those Republicans, but this is a Democratic primary, and it is a primary that has been contentious. Scott Stringer, thank you so much for joining us. Obviously, his leadership in Manhattan politics and, of course, his public service as comptroller as well. Scott, I want to get the obligatory questions out of the way. You have been accused of sexual harassment. It has turned your candidacy upside down. What do you do now to move forward? Should you be dropping out and giving a powerful endorsement to a progressive, a liberal, or do you move on to the primary?
Well, look, these allegations literally are as far back as 30 years ago, and it is unfortunate. It has had a big impact on the campaign, no question. But look, this is not an easy venture when you run for mayor of New York City, and, people are going to come at you. But I have full faith in the voters of this city who know my 30-year record. They know the kind of person I am. Just the other day, 300 women progressives signed a letter in support of my candidacy. So look, it's a challenge, but when people look at the inconsistencies, when they follow the facts, they know I've been the same person they've always knew me. In terms of endorsing another candidate, I'm in the race. And while my supporters can rank me first, they have an opportunity under ranked choice voting to rank another candidate second. But I have no plans to make an endorsement, but that could change in the coming days. Who I would like to see as a second choice candidate. It's something I was thinking about over the weekend, and we'll see how the next few days play. But right now, I'm running to win. The support has been really strong. And I just want to say to you, I don't think there are 3 Republicans in Manhattan. I think there are 2.
Okay, well, there's 2, and we'll do it. And Ken Pruitt was the 3rd one until he passed away. Scott Stringer, I look at the moment, and I distill down this campaign. And folks, for those of you nationwide, it has been it is about democracy in New York City, even if it's one party. And Scott Stringer, it's devolved down to public safety and to the police. I want you to state your approach to this divisive nature of the police in this nation, and particularly the NYPD.
Well, look, there's no question that people are concerned about public safety, and they should be. I'm a kid who grew up in the city in the 1970s when there were 2,000 murders a year. My mother used to tell my brother and I, when you get on the 8 train in Washington Heights, sit in the conductor car. because that was the only safe car. So I have lived my life through that lens. Obviously, we've come a long way in terms of safety. And I think the next mayor has to make sure the police are finding the people who are doing the shootings and to tackle the violence in the streets. There's no question about that. But also we have to think about a police force that is less about over-policing in Black and brown communities, more investment in kids to keep them away from the criminal justice system. We're seeing around the country that when you respond with mental health professionals to mental health challenges on the street, the results are better. So the next mayor is going to have to be able to keep the streets safe and also make sure that we have a policing system that is fair and just. I think I'm qualified to do both, given my 30 years of experience in government, and I'm looking forward to that challenge.
All right, so certainly a divisive issue, Scott, but probably more divisive and at least more disparity with regards to the policy positions that I've seen amongst the Democratic candidates here is their position here on education and specifically how you make these investments, if you make investments at all, in our public school systems, in our charter school systems for some, but more importantly overall in making sure that a lot of the kids out there are getting a fair education.
That is going to be one of the #1 issues facing the city. And look, I'm a public school parent. I got married late in life. I have a 9-year-old and an 8-year-old. They're in public school. Look, I'm a failed remote learning teacher. They really struggled. It was no joke. Our wonderful children really got hit hard. This de Blasio administration really didn't prepare for the pandemic, and I worry that they haven't prepared post-pandemic. But look, I believe that we need a mayor who's going to direct the issues facing kids, mental health challenges, more tutoring, direct aid for the kids. And my proposal, quite simply, is to put 2 teachers in every classroom, K to 5, because that's what the charter schools do and the private schools. It's time to give public school students the opportunities to get a first-rate education. I'm proud to be supported by the teachers and the principals and the community professors, and I'm the education candidate for mayor.
But, okay, but where do you get the resources to do that, the monetary resources? And it almost dovetails with Tom's question before here about the approach to the NYPD. There are a lot of people that want to see resources maybe taken out of that column and put potentially in the education column here. How do you balance those competing interests?
Well, the nice thing about electing the city controller mayor is I actually know the finances of the city. I know where the money's been wasted over the last 8 years, and there's no proposal I've put forth that I can't pay for. We can put 2 teachers in every class, some $300 million a year, because we're getting record foundation aid from Albany. We can equalize after-school programs for all kids, regardless of zip code. That's $200 million. We can actually begin to think about all of these programs, because budgets are about priorities. So if you don't waste money, and then money we're receiving from Albany, stimulus money, we could create real programs that can realize systemic change in the system. What I've put forth, but I agree with you. You got to know where the money is, and no candidate running for mayor has any understanding about the money, because they had the opportunity to audit and investigate the de Blasio city agencies, as I have.
Scott, not enough time here, but I've got to get this in. It's too important. Your heritage of this island of Manhattan, of New York City, goes back to Abraham Beame, your support of Mario Cuomo long ago and far away, and particularly your family affiliation to the wonderful Bella Abzug. Folks, whether you agreed or disagreed with her, everybody loved and admired Bella Abzug for her energy. What would Bella Abzug say about the mess you're in right now?
Oh, keep fighting. You know, listen, you don't begrudge the challenges you face. To be mayor of New York City is not a straight line. Look, I beat Eliot Spitzer when everyone said I couldn't. I beat Eva Moskowitz for borough president when everyone said I couldn't. I've never been in a race where I was ahead or I didn't have turbulence. I'm a city kid. I get knocked down. I get backed up. That was what Bella Abzug did in her career. That's what so many people before me did. My own mom was a single parent running for the city council when I was a little boy, and I watched her get knocked around too, and she kept fighting right back. And if we were alive today, they'd be like, keep your head down, keep moving, and get to the polls. That's what they would be telling me.
Scott Stringer, thank you so much for joining us today. And I really can't say enough, folks, about the good joy of seeing these different mayoral candidates join us here worldwide and across this nation on Bloomberg Surveillance. Romaine, it's going to be fascinating. I mean, it's a ranked order system. It's a different way of electing. It's a different vote for New York City.
Yeah, totally new for a lot of of New Yorkers, a lot of us still trying to figure out how we're going to do it and, of course, who we're going to line up and in what order.
I was going to do a write-in for John Farrow, but
okay.
I was told,
I don't think he wants the job.
Maybe that would... My goal is to get beneath 59th Street. If I get lower than 59th Street, maybe I can vote. Right. Stay with us on Bloomberg 1130 and television. This is Bloomberg. Good morning.
Bloomberg surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Ferro, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
That over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Range-bound markets as we count down to the Fed from New York City for our viewers worldwide. I'm Lisa Abramowitz in for Jonathan Ferro, and the countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Ferro.
We begin with the big issue, markets awaiting Chair Powell.
The big event this week is the Fed.
The debate between transitory and persistent.
Talking about tapering or something along those lines.
A lot of the Fed speakers over the last few weeks have been sort of dropping breadcrumbs.
Finally, markets are trusting the Fed.
The bond market is telling us that inflation is transitory.
We're seeing a surge of demand. Yes, we're seeing a shortage of supply. Yes.
The airfares, the used car prices, etc.
The biggest risk is if we start to see wage pressures go up sustainably.
Everybody's screaming there's no inflation.
There is some inflation here that's going to stick.
I don't see a bond market yet reflecting that there's transitory inflation.
No, I don't agree.
It really doesn't matter if inflation is transitory or persistent.
We're all looking at the Fed.
It matters what the Fed thinks.
That's really where the debate is in the market.
Let's bring in the Bloomberg team for more. Michael McKee and Kayleigh Lines joining us. Mike, what are people preparing for on Wednesday?
Well, you know, if you've got your treasuries priced at the moment where you think they should be, you could expect a little bit of volatility, but not much movement because the Fed aims to ratify your view. The first question is, what do they do about the transitory question? Do any members of the Fed think that they're going to have to raise rates sooner? We'll be watching the dot plot. You can see there only 4 members saw a rate increase in 2022 at the March meeting. Do any more join them? Do we pull forward anything from 2023? Which then leads to the next question, where are they on talking about tapering? We have already seen some hints drop that it's about time. They want, they say, to see substantial further progress on their labor market indicators. Well, here's where we are. Is any of that enough to send stronger signals tapering is coming? What can we read into this statement and Jay Powell's press conference? Finally, they are considering a technical change. Matters to you guys on the short Treasury desk. There is so much cash in the system, of course. It's pulling down money market rates. The Fed repo system is being used tremendously, reverse repos, T-bills trading negative. The Fed doesn't want that to happen to its benchmark indicators. So there is a possibility they may raise the rate on excess reserves to ensure it stays well within that corridor range they have created. While effective Fed funds have drifted lower, they are holding at 6 basis points, though. How do markets react to any news of a rate hike, even if it's just a technical change? That's a fear at the Fed. So they may not move it as long as the effective Fed funds rate is still hanging in there around 6 basis points. But it is also something to watch for, Lisa.
Michael McKee, thank you so much. Meanwhile, the Treasury rally losing some steam after 10-year yields recorded their biggest weekly decline of the year. Bloomberg's Kayleigh Lines joining us now with more on how the market is positioning, as Mike was talking about, ahead of that Wednesday Fed meeting. Kayleigh.
Well, Lisa, it seems the bond market is buying what the Fed has been selling, in that inflation will prove transitory and policy will stay easy. As you said, that was reflected in the move we saw in yields last week, the biggest weekly decline in a year, and even despite CPI rising more than expected. Of course, right now we are ticking up just a touch around the 1.46% level, just off the lowest since early March. And some strategists, like those over at Morgan Stanley and Citigroup, saying that leaves the market vulnerable to a hawkish Fed surprise this week. As for how this is translated across other asset classes, given that rates have moved lower, tech has been performing better within the equity market over the last week. NASDAQ 100 futures up about 1.5%. And then a commodity complex, of course, you see crude continuing to rally. But on the other side, gold has been sinking. And that once again is the case today. Futures down about 1.75% today alone. Our colleague Cameron Christ writing on the MLive blog this morning that could be telling us there is again a latent fear about a hawkish surprise coming on Wednesday.
Kayleigh.
Speaking of Wednesday, as Mike said, we'll of course be watching any move in the dots. And as for how the market is pricing where the Fed is going to lift off from zero, Fed Fund futures indicating the first hike is going to come in 2023. But it won't just be one. 61 basis points or so of hikes priced in at the moment. So at least 2 rate increases by the end of that year, Lisa.
Kayleigh, thank you so much. Meanwhile, a lot of people raising concern about the potential consequences of the Fed not changing policy. Mohamed El-Erian in the Financial Times today writing, quote, "The Fed risks a sudden slamming on the monetary policy brakes, thereby increasing the possibility of a recession. Unsettling financial volatility down the road is more likely. Another potential headwind to much needed a period of high and sustainable growth." Joining us now to weigh in, BlackRock's Kate Moore and Stuart Kaiser of UBS, both off the bear paths over the weekend. Kate, I want to start with you. Your note was actually echoing a lot of what Mohamed El-Erian was talking about, this idea of the potential negative consequences from the Fed continuing to buy $120 billion of bonds at this point in the credit cycle. What's your view on that?
Yeah, look, one of our big themes has been the amount of liquidity that's being injected into the system by the current policy is not matching where we are in terms of the economic restart and the sustainability of economic growth. And so while we're not calling for the Fed to completely reverse course on all of its accommodation, we do recognize that some of these extraordinary measures that were put into place as a result of the pandemic are no longer necessary. And so that's really kind of like what we're saying. Some of this liquidity is creating some distortion in financial asset valuations. And I would say, and also real asset valuations, particularly in the real estate market. So we are trying to avoid a bubble or a burst of a bubble or any kind of overheating that could be potentially painful at any point during this recovery and restart. And so would like to see a gradual tapering of asset purchases sooner rather than later.
Well, and that's actually something that Paul Tudor Jones was saying on CNBC this morning. He said that things are bat poop crazy. He used a different word than poop, and he was talking about the incredibly elevated valuations here. He said that this Fed meeting potentially could be the most important Fed meeting ever. Stuart, weigh in here the idea of elevated asset prices and what danger that poses to financial stability and, frankly, to the recovery down the road should inflation surprise to the upside.
Yeah, good morning, Lisa. Look, it's certainly a risk. I just think the Fed's focus is not there right now. I think, as Kate touched on, the economy is doing very well, but the Fed is, still focused on two-sided risks and kind of speaking very cautiously about the sort of pace and sustainability of the recovery. In our view, the Fed is going to remain pretty dovish. We don't even expect them to increase the 2023 dots, which would sort of continue what we've seen recently. And the markets are priced for that, right? Break evens have come down substantially. Rates have come down substantially. Equities are at an all-time high. The VIX is down to 16. But what I would say is last week, even given the positive market reaction, a lot of the incoming client questions were about hedging inflation. So people are worried about, let's call it that tail risk kind of outcome, from the Fed being, pretty confident that not only will this be transitory, but secondarily, if it's not, that they have the tools in place to overcome that. But unfortunately, the tools to overcome that could be pretty painful for markets, which I think is why people are on guard for it.
Well, and Stuart, can you just give us a sense of how people are hedging against inflation, what the most popular way of doing that is?
Yeah, look, I think the most popular way is probably just being short bonds. But, in the equity space, I think you've got two sort of broad choices. Either you're long reflation assets, so you're kind of you own upside in things like metals and mining, energy, materials, banks, or frankly, you're hedging tech. And I think in the equity space, those are your two choices. And the choice of those two, I think, essentially relies on how fast you expect the move to be. If you think it's going to be relatively controlled, you're along those cyclicals. If you think it's going to be quick and sharp, you're kind of hedging tech. Sorry, Lisa.
No worries, Kate. Weigh in on this because actually JP Morgan, among others, came out. TD Securities' Priya Misra came out and said now is the time to reinstate short positions on treasuries with respect to what Stuart's talking about, fear of rising inflation. Do you pile on that trade? Are you reinstating bearish bets on treasuries after the recent rally?
Look, I wouldn't say we're actively piling in. We've been short duration in our fund for a while and been holding much higher cash levels than you would otherwise imagine given where yields are. But I was listening to what Stuart was saying and thinking about other hedging. And I think a really important thing to do if you're more of a long-only investor is to really start looking at those companies and maybe sometimes broader industries that have pricing power. I mean, that's going to be the best hedge for your equity portfolio right now if you don't use other derivatives or can use bond markets. And this is a tough one because you need to think about who is able to pass on rising input costs, who has control of their labor costs, which is critically important as well, and in broadly looking at which companies have low labor intensity to sales when the market is this tight and where that's a major driver of inflationary and cost pressures. So there's a multitude of ways to go at it, from a cross-asset perspective, from holding higher cash, and then from being very specific on the individual holdings.
So, Kate, before we move off of this topic, we were speaking with PGIM at Fixed Income earlier today, Robert Tipp, and he was saying that he actually thinks we have seen the peak in Treasury yields, that actually they could fall further between the 1.25% and 1.5% range for the next 12 to 24 months, saying that the sort of disinflationary trends of more debt, the demographics, and going back to just the normal we had before is the reality. What is your argument against that?
I mean, I understand what he's saying. I would suggest that it's too soon. You know, inflationary pressures are continuing to percolate. We haven't even gotten to that point where the FOMC is actually changing their guidance or changing their accommodation. You know, our expectation is that yields drift higher through the second half of this year. Although I have to tell you, Lisa, like pinpointing an exact level is a science that, you know, I perhaps would get a failing grade in. Many people would. But, you know, it seems too soon to say that we're going back to disinflationary pressures. I think we have another couple quarters, frankly, of supply chain disruptions and labor market, you know, disruptions as well before we can really go back to a more normal environment.
Kate and Stuart, you're going to be sticking with us right now. Let's go to Bloomberg's Abigail Doolittle with a look at some of the stocks moving ahead of the opening bell. Abigail.
Lisa, as you know, futures are basically mixed and flat, but beneath the surface, lots of movers. Starting out with the shares of Lordstown Motors, the stock is really plunging here in the pre-market. This on the news that the company, an internal probe found that the company misstated vehicle pre-orders, essentially inaccurate statements. The CEO and the CFO have both resigned effective immediately. Again, shares of Lordstown Motors plunging on this news. As for the rest of the electric vehicle space, however, it is in the green. You see Tesla popping up about 0.6%. Of course, CEO Elon Musk over the weekend said that the company will be allowing for payments in Bitcoin once again, once mining gets cleaner. Workhorse, this is one of the meme stocks in a way because it does have a short interest of 42%. So perhaps some of that squeeze happening once again today, a double over the last month on that action, and Fisker going along for the ride. And then finally, Lisa, on Elon Musk's Bitcoin comments, the crypto space is back on fire. Yesterday, on Sunday, Bitcoin itself up about 9%. Today, the crypto stocks also in the green.
Abigail, thank you so much. Coming up, world leaders wrapping up the G7 summit in the United Kingdom. President Biden turning his attention to NATO and a meeting with President Vladimir Putin. That conversation coming up next. Right now, we've got mixed markets really ahead of the open, not doing that much, kind of looking for some direction. The S&P basically flat after reaching record highs in tandem with global equities last week. This is Bloomberg.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
I think you're going to see just straightforward dealing with China. And again, we're not looking, as I've told Xi Jinping myself, I'm not looking for conflict. Where we cooperate, we'll cooperate. Where we disagree, I'm going to state it frankly. I think there's plenty of action on China, and There's always something that you can, I'm sure my colleagues think there's things they think they could improve that they wanted, but I'm satisfied.
Geopolitical tensions heating up on the last day of the G7 summit as leaders unite against China's economic policies and ties with Russia. China responding to comments made about Hong Kong, calling talks amongst the U.S. and other G7 countries slanderous. In a communique reading, quote, "This is a serious violation of the basic norms of international relations, with further exposed the sinister intentions of a few countries such as the United States." NATO Secretary General Jens Stoltenberg weighing in ahead of the summit.
We are presented with a number of challenges to our security that we need to tackle together. We have a historic opportunity to reinforce the transatlantic bond and to prepare our alliance for a more unpredictable and more contested world.
For more, Bloomberg's Maria Tadeo joining us now from Brussels. Maria, what's the latest in terms of the agenda and the likely outcome from today's summit?
Well, look, I think the first message here, of course, is that President Trump is coming to this NATO summit with a very different tone. You know, he's focused on this idea that America is back at the table and really wants to engage with allies. And what's really striking to me, Lisa, is that normally President Trump would tweet from the minute one that he cared about that 2% spending when it comes to NATO. This is something that we haven't really heard from the U.S. delegation in this NATO summit. The focus will be very much on Russia and China. You know, there are big concerns right now about some of the military operations that are happening in Eastern Europe, and the president will have bilateral meetings with the head of the Lithuanian government, also the Polish and the Ukrainians, who are very concerned about those moves. And there's also China feeding into this very much along the lines of what we heard in the UK during that G7 meeting. You know, they worry about some of the military capabilities that China is developing. They also worry about the economic ties, that Silk Belt Road, that will give the Chinese huge soft power over some southern European economies in Europe, and they're now looking to counter that.
All right, Maria Tadeo, thank you so much. Still with us, BlackRock's Kate Moore and Stuart Kaiser of UBS. Stuart, as we hear about all of these geopolitical discussions and alliances, do markets care at all?
I think they do care. You know, our view was actually, the first half of this year was going to be much more about, COVID recovery and economic data, and the second half is going to be much more about geopolitics. And, perhaps the G7 is focusing people on that again. And, I do think as you get into the second half, it's Fed taper, it's regulatory policy, it's tax policy, and then it's China trade war. And, whether that comes back onto the radar, it remains to be seen, but I think it probably does. So I think once you get past sort of this this data period in the first half, the second half I think will be much more about geopolitics, and the market's going to have to kind of reorient itself to those issues.
Stuart, specifically, what asset classes, what potential moves could we see in response to geopolitical developments that you're expecting later in the year?
Look, it depends on the specific geopolitical development. I think, in terms of China, I think, we had a China trade war, 18, 24 months ago. So I think people are actually pretty well positioned or educated in terms of how to deal with that kind of risk. And, they know which assets, they know which stocks are sensitive to that, whether it's trading Asia equities directly, whether it is using, a proxy such as, for instance, German equities, which are very, very highly levered to China performance, whether it's copper, whether it's dollar Aussie, things of that nature. So I think it's going to depend on the specifics, but luckily the China trade war playbook doesn't have too much dust on it. So I think people will be able to kind of prepare for that pretty quickly.
Kate, do you think that this is a relevant feature for markets to be preparing for a détente between the U.S. and China again, akin to what we saw under President Trump?
I will sort of echo something that Stuart said, that we really have been focusing on COVID, the vaccine rollout, and the economic restart in the first couple months of Biden's presidency. But at the same time, we still have had some important events or non-events in some cases between the U.S. and China. There has been language used, lines drawn, public statements made that indicate that this strategic decoupling, the strategic competition between the U.S. and China is very much in play in this administration as it was in the previous administration. And I think that's starting to really get priced into some stocks that are geared towards the U.S.-China relationship. If there are concerns around additional sanctions or additional entity list additions, those stocks are already starting to price that in. So here, Stuart, we don't have to we haven't had very long since we were going through the U.S.-China trade tensions, and so we still have the playbook in front of us. I would suggest there's going to be some new chapters to that playbook, and it's going to have to be kind of a more nuanced approach to the opportunities in China for U.S.-based investors. Well, that said, I still see a lot of upside, but I think we're going to have to be thoughtful.
When you say new chapters, that's what I wanted to say, to go to. Is this exactly the same playbook, or does it have nuances that you think are important to emphasize and elaborate on right now?
Yeah, I mean, I think there are some new chapters, some positive chapters and negative chapters. A positive chapter is I think the U.S. and China are going to collaborate more on sustainability, on climate. That's going to be one area of agreement. So I think you're going to see some opportunity for companies that are geared towards the expansion of spend on ESG, sustainability, and climate. On the other side, on the technology side, I think the decoupling is going to become even more fierce, if you will. And so investing within kind of U.S. and other developed market supply chains versus the China supply chain, it's going to have to be a sort of very two-pronged approach to getting access to the best technology companies in the world. So a positive chapter on sustainability and climate, and a more challenging chapter, I think, where it gets even harsher between the U.S. and Chinese technology companies.
And Kate, you've mentioned on several occasions just the idea that supply chain disruptions will occur and will continue for many quarters to come, or at least several quarters to come. And Stuart, I'm wondering from your perspective how that features into inflation, how that features into a market call, considering how much that's jacked up the prices for everything from lumber to anything else that you buy in the supermarket.
Yeah, I mean, I think it's incredibly important, and I think the inflation report last week, highlighted both sides of that coin, right? Which was, a lot of the inflation came from used car prices, which seems to be pretty directly linked to supply disruptions, but the pressure was not as strong as it was the previous month. So that kind of, bakes into the transitory argument. But the second part of that inflation print that was important was rents. Which rose, faster and more than our economists would have expected, and that's something that's going to be a lot sort of less transitory. So I think, the question here is, does any of this supply disruption become, bleed into goods prices and other areas of inflation that are less transitory? And secondly, do we start to see parts of the inflation basket that are not transitory kind of, gain steam behind them? And that's the risk. If it's transitory, that's great. Unfortunately, if you're someone who cares about their P&L for the next 3 months, you sort of can't rely on that, and you have to look at the data and the cadence as it comes in. I think what people are going to be focused on is, A, the transitory aspects. Are we seeing those start to tail off? And B, things like wages, things like rents that are more sustainable. Do we see real building momentum there? And I think that's where it would really start to catch both the Fed's attention and the market's attention.
So, Stuart, you were hiking this weekend. Kate, you're off in Jackson Hole. When do you guys plan to come back to the office, Kate?
Well, I was back in the New York office for some of last week. So, and I'll be back for a bit in July, and then 3 days a week starting in September. I'm very much looking forward to being face-to-face with my colleagues.
Really? Stuart, the reason why I ask, of course, is because Goldman Sachs is bringing everyone back to the office. Stuart, what's your view?
I'm in the office almost full time, and I have been for months and months. So I look forward to more people being around. Actually, it's a little empty over here, but I'm in the office and coming in pretty much every day.
Kate Moore, Stuart Kaiser, both of you, thank you so much. Coming up, the morning calls, and later, Wall Street unveiling their updated inflation playbooks. J.P. Morgan's Elise Ausenbaugh and John Hancock's Matt Miskin joining us at the opening bell to weigh in. That conversation still ahead. Markets range bound here with just minutes to go before the open. This is Bloomberg.
Wednesday, the Fed decides. Will the Fed react to accelerating inflation concerns? Are members eyeing an earlier rate increase? Coverage begins at 1:30 p.m. on Bloomberg Television and Radio.
Time now for our morning calls. A look at some of the analyst recommendations on Wall Street this morning. First up, Raymond James upgrading Chipotle to a strong buy. The analyst seeing benefits stemming from its price increases. And next, North Coast Research upgrading Wendy's to a buy. The analyst highlighting the company's compelling channel checks. Coming up, could transitory inflation prove problematic for equities? That conversation coming up next. And this is Bloomberg.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Countdown to the Open. I'm Lisa Abramowitz in for Jonathan Farrow. Moments away from the start of trading, the S&P trying to get higher than the record highs that it set last week. The S&P basically flat, though. The NASDAQ a bit higher, but still not doing that much. Interesting to see how Treasury yields are going a little bit higher, but still nothing to write home for, 1.46%. And you're seeing oil hit the highest, new highs since 2018 here. The euro gaining a little bit versus the dollar. A sleepy day after an unprecedented number of records yesterday, or last week rather, I should say, with global equities and the S&P charting new highs. The focus very much on the Federal Reserve. Will they crimp the rally, the parade, with some sort of guidance? Let's head to the markets desk where Bloomberg's Abigail Doolittle joins us now with the stocks moving at the opening bell. Abigail.
Lisa, contributing to those small gains for the major averages, or at least the S&P 500. Some of the vaccine makers, Novavax, positive news in terms of a phase 3 trial is shown that their COVID vaccine is 93% effective, including against variants. And the company has previously said that it won't file for emergency authorization until Q3, so that may still be on. They're now also saying that they're on track to manufacture 100 million doses by the end of Q3. We also have CureVac higher, up about 3%, after Germany is saying that once that company's vaccine is approved, it will be a part of the vaccines available to the German people. Airlines popping higher, and of course travel has been resuming and climbing as more folks are vaccinated. American Airlines, Delta, United, all higher. TSA checkpoints last week registered at 1.89 million, and that is up 6.3% from the previous week. So moving in the positive direction, the right direction, I should say. And then finally, Lisa, you were mentioning that oil is at its highest level since October of 2018. Not surprisingly, we have oil makers, big oil. We also have E&P names higher. In fact, energy right now for the S&P 500, one of 3 up sectors, up about 0.6%. The leading sector, again, in sympathy with oil rising above $70 per barrel.
Abigail, thank you so much. Meanwhile, Wall Street dusting off their inflation playbooks ahead of a Fed rate decision. For more, let's bring in Bloomberg's Ritika Gupta.
Thanks, Lisa. Well, inflation sitting at its highest levels in several years, yet still on Friday, the S&P 500 surging to another record high and break-evens. Those are your market expectations of inflation's down at least 20 basis points since their May 17th peak. So at least for now, the markets are siding with the Fed's narrative that inflation is transitory, because although inflation exceeded those estimates, this was largely down to transportation. So a third of that surge coming from used vehicle prices, hotels, airlines, some of these reopening sectors. So that's why the Fed really warning here that it's not likely to be a permanent. Now, what that means for equities, well, we're seeing a broad rally. We're seeing tech rising along with some of your cyclical players here, because many strategists pointing to this idea that mild inflation is good broadly for equities. And Goldman Sachs coming out and saying that you're less likely to see a distinction between cyclicals and defensives in the market, and that there's likely to be market leadership opportunities for a diverse range of sectors on this growth and inflation outlook. As for what could disrupt this, well, we do have that Fed meeting coming up on Wednesday, expected to be a bit of a snooze fest, but JP Morgan does have a report out today saying that Fed could start to taper early next year. So we know the market will still be hanging on to every word from Jerome Powell on Wednesday.
No doubt, and we will be doing a special broadcast on that. Ritika Gupta, thank you so much. Meanwhile, Goldman's Peter Oppenheimer saying inflation expectations could fuel more diverse opportunities, writing, quote, market leadership has rotated to reflect higher growth and inflation expectations, and along with this, valuation spreads have started to compress. We expect the clear distinction between growth and value to fade. Joining us now to weigh in, JP Morgan's Elise Austinbaugh and John Hancock's Matt Miskin. Elise, I want to start with you. We were talking about inflation expectations becoming peak inflation expectations, then unwinding, which is what we saw over the past few weeks. Where are we in terms of positioning from your perspective? Are people overly confident in inflation picking up or not picking up right now?
I think it's a combination of both, right? You've certainly had that narrative over the past few months where people have expected that inflation was potentially going to get away from the Fed. They were going to, potentially be forced in a situation where they had to tighten policy sooner. But I think the market has really started to wake up to this realization that the inflationary pressures are indeed transitory and that things will start to normalize in the coming months. This is a really unique period where we're dealing with those supply constraints, but they're finally starting to dissipate. And also, when we look at the labor market, you've got these dynamics where the issue isn't necessarily that companies don't want to hire workers. It's that workers are still reticent to get back into the labor force. So it could still be a few more months until we start to see that narrative shift once the federal unemployment supplements expire and once children actually go back to school in person. And so that should contribute to kind of the ongoing labor market recovery. And then in terms of inflation itself, we're watching data points like the median CPI released by the Cleveland Fed, which still looks really tame, and also rental price inflation, which again is another component that we think super important, but looking relatively tame. So I personally am fairly comfortable with how the market has been digesting this. You've seen tech outperform since that first hot print back in the middle of May. And to me, that signals that peak inflation fears may very well be behind us.
Matt, do you agree that people are actually coming to the realization that the Fed is correct about transitory, or do you think that there just is an ingrained complacency that's getting more and more ingrained in markets?
No, we don't believe that it's really priced in yet. And the pain trade right now is falling Treasury yields. So Treasury bonds right now starting to get a bid, catching everybody off sides in terms of market participants in our view. And as Treasuries continue to rally here, that's going to cause a rotation in the market. And what you've seen over the course of the second quarter is even though Treasury yields are down, financials and cyclicals are rallying. And there's this massive disconnect. And we do think that the equity market starts actually coming more towards that of the bond market in repricing some of those cyclical stocks to come more in line with the growth side, some of the technology names. And that's something that could play out actually in the third quarter and something to really see as a development.
Well, but then, Matt, let's talk about fundamentals and whether they matter. I mean, everybody's going on vacation. People are all renting cars, flying on planes. That's why fares are so high. You have the world reopening. All of that already priced in. Is that what you're saying? And that basically all that we have to do now is reprice inflation lower than where we had it earlier this year?
Well, one of the big signals is a tweet that you had out this morning, Lisa, about lumber prices. Lumber prices are down 30% from the peak. And they're still up massively year over year, but there's a lot of things we're looking at right now where the base effects are going to start to become less so in terms of inflationary readings. We are likely to get some of the supply chain disruptions worked out, so that should lead to less inflationary pressures. There very well could have been the hottest inflation year-over-year prints just in the last several months, and that would be disinflationary as we go into 2022. So investors are likely going to need to pull that around and rotate portfolios to reposition for that. And we think that could mean the quality factor, that's our top idea for the back half of 2021, would be the best place to position for equities going into next year.
Elise, do you see this as a likely scenario that perhaps we could see some selling within the financials, selling within some of the cyclicals that had benefited earlier in the year and a rotation back into the mainstays of big tech?
Not necessarily. I mean, our call right now is very much to balance that longer term secular growth exposure that can be found in sectors like tech with this cyclical opportunity that we're seeing in financials, which remains one of our favorite sectors. When I think about like the longer term outlook for inflation, I think you have to remember that the economy is coming out of this recession in a place of structural strength. We've got super healthy consumers with strong balance sheets and trillions of dollars of pent-up saving. You've got a booming housing market, and we still expect residential real estate to kind of, keep moving along to replenish those depleted inventories. You've got benign credit conditions. You've got a government that is very keen to, or governments globally that are keen to avoid the austerity mistakes of the past. And so to me, that continues to point towards inflation that's going to be higher this cycle than the last. And so we really want to continue to lean into the beneficiaries of that, which, the best example is really financials. And not to mention that financials did a great job of shoring up their balance sheets and insulating themselves throughout the pandemic. And that also gets us more comfortable with recommending allocations like preferreds as a way to augment yield in portfolios.
All right. Well, Elise and Matt, you're sticking with us right now. We're going to turn briefly to Bitcoin. Cryptomania getting a renewed boost from yet another Elon Musk tweet. Let's head back over to the markets desk. Here's Abigail Doolittle. Abigail.
Lisa, Cryptomania stocks are certainly on the rise today on CEO Elon Musk, CEO of Tesla. Musk's tweet over the weekend saying that the company will use Bitcoin again once mining is environmentally more sound. But there's another mania to take a look at too, and that is meme mania. We have the AMCs and the Wendy's up on the world. Behind it, of course, are the big short squeeze. Now, the meme mania this year with these stocks collectively up more than 100% on the year has really changed the way that stocks are shorted. A year ago at this time, 79 of the Russell 2000 stocks had a short interest of 30% or more. Now it's about 19. The top one is Workhorse at about 42%. We also had Bed Bath & Beyond in the mix. And if you want to see why, it's because of that huge move up for these meme stocks, these highly shorted stocks. The Robinhood basket, the original Robinhood basket, up about 107% over the last year relative to the S&P S&P 500 up 13%. So these shorts are afraid to short that they might get burned no matter how profitable, or I should say unprofitable, a company is or other reasons to short a stock. Investors, traders are just afraid to do it. Mike Wilson telling you that last week. That's one of the big questions he gets from clients. And then finally, Lisa, as you know, it's not an even ride. One of last week's big meme stocks, Clover Health, at one point up 200%, now down 50% from that all-time high, but over the last 6 days, up 60%. Not for the faint of heart.
Abigail Doolittle, thank you so much. Just to give you a sense of how much some of these companies have outperformed, more than 80% of firms with at least $100 million in market cap and a short interest of 15% or more gained an average of 18% in the past month. Just to give you a sense of how much stocks that could be identified as meme stocks have outperformed. Elise and Matt still with us. Matt, I'd love your take on the significance of the rally that we have seen in these specific stocks. Yes, you can try to stay away from it and not play it, but they are increasingly a significant component of certain indexes. How much are you paying attention to this, and how do you play it?
We're paying attention to it very closely, and it is becoming much greater impact in the indices and market cap weighted type positions that you could have. And we really think that this is a great time for active management to move away from those stocks. You could see active strategies really put on alpha as these meme stocks flatten out. They see some price pressure, and that's where active will shine. I think this is the biggest problem the Fed has right now. They think inflation is transitory. We believe that's right, but there's excesses in the market. And this is the stuff that the Fed can get really burnt in longer term if there's really price volatility more broadly as this stuff shakes out. And the one thing that we're looking at, going to this Fed meeting this week is they don't have a lot of room to raise rates before they could invert the yield curve. At 1.5% at the 10-year Treasury, they don't have many times they could raise rates to pull out excesses of this market. And that's one of the big risks coming into this. And I think that's one of the conversations they're having at this meeting that they're not really going to talk about is how do we actually tighten if the curve is this flat and get some of this meme stock madness, this, the cryptocurrencies, how do they pull that out, the excess liquidity, to make this not a bigger issue?
All right, Elise, just real quickly here, do you agree? I mean, is this a big concern for the Fed?
I don't necessarily think it's a big concern for the Fed. In terms of the shape of the yield curve, obviously we've seen this huge drop in 10-year yields over the past couple of days, but we do expect yields to rise back to around 2 to 2.25% over the course of the next year. I think when you were considering the market broadly, a lot of that excess that people were so concerned about and all of these bubble fears, like that already kind of came out of the market. You look at the 5 biggest stocks in the index and they're actually trading at valuations that relative to their history aren't all that, I guess like unpalatable. So I don't necessarily think that the Fed is really having this perspective that it's something that they've got to manage or, consider carefully as they determine what their future policy path is going to be.
Elise Asambaugh and Matt Miskin, thank you so much for being with us, and you're going to be sticking with us. Coming up, Goldman Sachs bringing employees back to the offices across the U.S. for the first time in more than a year. That conversation coming up next. This is Bloomberg.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
Crypto is a nuanced issue, and it's possible the U.S. gets crypto wrong.
Vietnamese people have shopped at wet markets or mom-pop stores for decades, and now e-commerce companies are trying to change this habit. Those including regional players like Shopee or Lazada or local startups Tiki have been building loyalty and trust by providing Vietnamese with services that are common in developed economies but very new to this country.
Mình chỉ cần ngồi ở một chỗ thôi và lên một cái trang web chẳng hạn thì mình có thể tìm được là rất nhiều những cái mặt hàng ở trên đó. Thứ hai nữa là về cái tốc độ giao hàng thì bây giờ cũng đã nhanh hơn rất là nhiều rồi, thậm chí là có những cái mình có thể nhận sau 2 tiếng như Tiki Now chẳng hạn.
The epidemic has given digital retail a boost, with more Vietnamese buying everything from food to electronics online.
Còn một cái nữa đó là tại vì cũng đang dịch ấy, thế nên là nếu mà mua hàng online thì sẽ an toàn hơn cho tất cả mọi người, bởi vì là mình sẽ không cần phải ra ngoài và tiếp xúc với nhiều người.
The country's e-commerce is expected to reach 29 billion in 4 years, from 7 billion last year. The government is also encouraging this sector with target of online shopping to account for 10% of Vietnam's retail sales by 2025.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
We're continuing to look at the data. No final decision has been taken, and the right time to fill everybody in on what we're going to do with step 4, with June the 21st, is tomorrow, as I've said, and that's when we'll be putting out the whole package of information so that everybody can see it.
A tale of many different reopenings. British Prime Minister Boris Johnson preparing to delay the reopening in the United Kingdom. This as the private sector gets back to work in the United States. Goldman Sachs reopening its office doors across the country. For more, let's bring in Bloomberg's Sonali Basak, standing there at the Goldman's headquarters in the rain all morning. Sonali, what's it been like? I mean, we know that there's been a lot of traffic. We know that you've seen a lot of people. What's the mood? Are people happy to be back to work?
You know, they really are. I've seen handshakes, hugging, high fives all morning. It's a lot of young people, Lisa, because remember, in addition to bringing employees back across the country, there are more than 2,000 or about 2,000 interns that are being brought to Goldman's offices for the first time as well. So tons of young people. Goldman's workforce, somebody had pointed out to me this morning, leans towards the younger side, mostly millennial, many under 30. So, bankers have been worried about their younger people. What Goldman is doing to make people feel welcome and really regain that kind of water cooler talk environment is put coffee stations all across the building so that people can get together and meet again in person. Remember, if you're vaccinated at Goldman Sachs and you have attested to that today, you do not need to be wearing a mask in the office. Yeah. If you are not vaccinated, you need to be wearing a mask at all times.
Sonali, could you paint the distinction, the divergences that we have seen between banks on both sides of the Atlantic in terms of those that are emphasizing the in-person office experience and those who are emphasizing, frankly, the opposite, the flexibility, the lack of the need for office space?
And it's not just, a Europe-U.S. thing, Lisa, here. Even in this area, just blocks away, you have Citigroup, which is still mostly empty, and has said they were going to take their time bringing people back into the office, right? So even the banks in the U.S. are taking different tacks on this. We have J.P. Morgan that has had people back for a while now. But again, Goldman Sachs today, what's the difference? They're requiring everybody back in office, and generally it will be a 5-day week again. It's return to normal, right? But as you say, for many people, return to normal may be a new normal. For Deutsche Bank, for example, many of the employees may be coming back after Labor Day, and some even later, right? Maybe not even back to work 5 days a week. with that said, these investment banking businesses, CEO David Solomon, he's out meeting clients right now. He's not even in the building.
Right.
So many people are back on the road and trying to return to normal here.
Thank you so much, Sonali Basak, for sticking with it all morning. Still with us, JP Morgan's Elise Asanbaugh and John Hancock's Matt Miskin. Elise, I can tell you are in the office. What's it like in terms of how many people are back, and has it been helpful for you?
It has been helpful for me. It feels really good to be back. I would say we're running somewhere around 50% capacity, so it feels good enough and responsible enough to kind of be safe and be face-to-face with colleagues without masks on. I'm just happy to, again, have the opportunity for that, like, of-the-moment collaboration and conversation that I think we all really missed throughout the pandemic.
And Matt, I guess there's a question from an investment thesis perspective of how the in-person or not in-person dictate it really matters in terms of, will you bet more on companies that have more of an in-office kind of policy, or is it completely irrelevant on the very much a case-by-case basis?
It's a case-by-case basis, but on a macro level right now, what we're trying to decipher is how sticky, in essence, this technology development and usage that we've been going through is. I mean, if you're able to use online meetings and other things, it's incredibly efficient. And that can cut costs for a lot of these big financial services firms that have people going out and traveling and a lot of business travel. You cut that cost, that's going to help the bottom line. And productivity, efficiency, that's going to how you're going to drive earnings and margins into 2022. And I think there's going to be a legacy of sticky technology usage and development and innovation here that's going to help margins stay pretty attractive going into next year.
Wait, Matt, this is important. So are you targeting companies that can cut costs, that can cut office space because they have effectively implemented tech strategies? I mean, is that something that is part of your investment thesis?
Yeah, absolutely. You know, and what we're seeing is at the industry level and at the sector level, you're seeing that as a key return earnings driver. And I think that's going to be where the technology advancement is going to be the biggest. And financial services is actually becoming much more tech every day. That is a place where you could see this becoming a helpful margin variable into next year.
Elise, do you agree? I mean, is this something that you consider as you decide who to invest in?
So for us, it actually has really big picture long-term implications. We've got this thesis that U.S. potential GDP growth could end up being higher over the next 10 years than it has in the past 10 years. And a lot of it does have to do with this assumption that the work from home dynamics could potentially be sticky. Because what that's going to mean is that there are going to be more people who are spending less time commuting to the office, which allows them to put more hours into their day-to-day job. It's going to enable potentially an increase in overall workforce participation by, giving those people the flexibility to both work and stay at home and tend to responsibilities like childcare. And to Matt's point that he just made, we think this adoption of technology and innovation in the services sector could bring a productivity boost, along with the increased relevance of goods-intensive sectors like the housing market, overall increasing productivity. So let's say that for the next 10 years, potential U.S. GDP growth is something like 2.2% instead of 1.8%. What that gives us is more than $1 trillion added to GDP over the next 10 years. It means that even once earnings growth normalizes, it could be higher than what we've seen on average historically. And it also means that the U.S. economy could grow stronger for longer and still be able to, absorb the inflation and higher rates that come along with that. So as an equity investor, that makes me really excited for the big picture.
Elise Asanbaugh and Matt Miskin, unfortunately, we're out of time. Thank you so much for your perspective. Let's get some sector price action this morning. Bloomberg's Dave Wilson here. Dave.
Thanks, Lisa. I mean, the 11 main industry groups in the S&P 500, you see energy kind of leading the pack, but some of the economically sensitive areas of the market not doing so well. Materials, the worst performers on the day, and then you have financial stocks and industrial stocks down. You see a little bit of strength in the big tech related industries, technology specifically, communication services, where you find Google's owner Alphabet, as well as Facebook, and consumer discretionary, the category with Amazon.com and Tesla, among others. One area where we're seeing some weakness, companies that went public through SPACs, blank check businesses, especially Lordstown Motors, down 19% after its chief executive and chief financial officer left the company in the wake of reports showing there were some inaccurate disclosures about pre-orders. So what you see there is a de-SPAC index, companies that have come public through SPACs, and it's been a group that struggled for some time, and it's down today.
All right, Dave, thank you so much. Time now for the Trading Diary. What you need to be watching this week, the NATO summit kicking off in Brussels with President Biden holding a meeting with Turkey's Erdogan at 11 a.m. Eastern today. Then the EU-U.S. summit coming on Tuesday, along with U.S. PPI and U.S. retail sales, a key figure for people on inflation watch. A Fed rate decision, the biggie, Chair Powell coming on Wednesday, and President Biden meeting with Russia's Putin in Geneva. In the markets, we don't see a lot of action here following the record highs that we saw last week. Still, the S&P failing to hold on to those, just inching a little bit lower, down 0.1%. The Nasdaq still up 0.2%, talking about that rotation that Matt Miskin was talking about back into big tech, with the expectation that perhaps inflation expectations had gotten ahead of themselves. We do see yields going slightly higher, with 10-year yields creeping just up to 1.48%, actually going a little bit higher than earlier in the day. And crude, this a fascinating one, highest level since October 2018, perhaps due to concerns about the Iranian agreement not getting through. This was Countdown to the Open from New York. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andris Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
Months after Hurricane Maria, Puerto Rico is still in peril.
Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rican. This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food. They're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off, these guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water, and it's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has come in here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá tan solo? I'm asking about why he's alone right here. He said things of life happens. Yeah, I'm here by myself. So ¿dónde vive acá? En la parte de... This is not a job. To do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jeevansathi.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. Jeevansathi.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from traditional caste community conservative parameters to something like which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji you use the most to send to each other?
There's a bear which basically we use for indicating a hug.
Yeah, that's our language basically, bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade, and they helped us finalize the venue. And it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date, and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was like very humanly and emotions and feelings based.
Massachusetts Senator Elizabeth Warren has become a symbol of everything the Republican Party stands against.
Everyone gets a right to basic health care. We need strong oversight of these banks.
A legal scholar and a consumer advocate turned politician, Warren has branded herself as a champion of the working class and made a career out of standing up to big business. While rumors of a 2020 presidency bid remain just that,
I'm not running for president.
her Senate seat is up for re-election in 2018, and Republicans are already pumping millions into super PACs to defeat her. This is the story of how a law professor and politician came to be seen as the biggest threat to Republican values and the greatest hope for progressive America. Elizabeth Warren was born Elizabeth Ann Herron, the youngest of 3 siblings, on June 22, 1949 in Oklahoma City to middle-class parents. After waiting tables to help her family pay the bills, Warren became a star on the high school debate team. She landed a scholarship to George Washington University at the age of 16, but 2 years later dropped out to marry her high school sweetheart, Jim Warren. By 1980, Warren was a mother of 2, divorced and remarried, had earned a bachelor's degree from the University of Houston, a Juris degree from Rutgers, and practicing law in New Jersey. Warren then went on to become an influential law professor, teaching, lecturing, and publishing highly cited work on bankruptcy and commercial law at 7 universities around the country, eventually settling at Harvard Law School. But Warren wasn't always a liberal lion.
Elizabeth Warren used to be a Republican, actually.
That's Stephen Dennis.
I'm a Senate reporter for Bloomberg. Around the time that Elizabeth Warren switched parties, she became a fierce opponent of a Republican drive to make it much harder to file for bankruptcy. She fought that for a decade. It ended up passing anyways.
While her efforts ultimately failed, her warning calls were heard in 2008.
We're in the midst of a serious financial crisis. Our entire economy is in danger, and without immediate action by Congress, America could slip into a financial panic, and a distressing scenario would unfold.
Professor Warren was tapped to help with oversight in the government bailout.
She would excoriate bankers and their bonuses and their practices.
Why should the U.S. taxpayer alone carry Citi?
She proposed a series of tough regulations, which became the basis for much of the Dodd-Frank financial law that we have today. That sort of catapulted her to national stardom, particularly among the progressive left.
Encouraged by her newfound notoriety, Warren declared her bid for the U.S. Senate on September 14, 2011. During the race, her opponent Scott Brown tried to derail Warren by accusing her of falsely claiming Native American heritage, a controversy that earned her the nickname Pocahontas. Nevertheless, she was victorious and won the Senate seat by a comfortable margin. She used her new tenure to challenge everyone, from banking regulators and Treasury officials to members of Wall Street and Congress.
I'm really concerned that too big to fail has become too big for trial. We need tough new laws to hold corporate executives personally accountable. No one should be above the law.
She called for Wells Fargo CEO John Stump to resign for fraud, introduced the Bank on Student Loans Fairness Act, and reintroduced the 21st Century Glass-Steagall Act. In 2016, after staying silent during the Democratic primary battle, Warren finally endorsed Hillary Clinton and had some harsh words for candidate Trump.
Donald Trump is a loud, nasty, thin-skinned fraud who has never risked anything for anyone, and that is just one of the many reasons he will never be president of the United States.
But she was wrong.
The forgotten men and women of our country will be forgotten no longer.
Warren wasted no time resisting Trump's agenda.
Have you ever managed or overseen a $1 trillion loan program?
I have not.
How about a $1 billion loan program?
I have not.
In the Donald Trump era, Elizabeth Warren has been playing defense and trying to prevent Donald Trump and his cabinet appointees from rolling back protections that she helped enact.
Warren actually found herself rebuked by Mitch McConnell for reading a letter by Coretta Scott King about Jeff Sessions' record on racism during his confirmation.
She was warned. She was given an explanation. Nevertheless, she persisted.
That moment became become something that's on T-shirts, bumper stickers, slogans, and that really galvanized a lot of support for her. It's been very hard for Republicans to get much of anything done this year, and that's at least in part to this resistance movement that Elizabeth Warren has helped champion.
We are here to fight back.
Enough of Elizabeth Warren. Like you.
Millions of dollars are being funneled to defeat Warren in the midterm elections in 2018. But it's the rumors of a 2020 presidential bid that has further prompted powerful donors to fund her opposition, often using the same playbook of constant and ruthless ad campaigns that many believe helped Trump win in 2016. It's anyone's guess if she will endure what Hillary could not.
You know, the question for Elizabeth Warren is whether she can go from being a liberal firebrand to somebody who can regularly get 60 votes for initiatives in the Senate and 218 in the House and drive an agenda, and whether she can bring together coalitions for political victories. That's the challenge, and we'll see what happens.
Sadiq Khan, the mayor of London, has made some powerful opponents.
He doesn't know me, never met me, doesn't know what I'm all about. I think they're very rude statements, and frankly, tell him I will remember those statements.
My message to Donald Trump and his team is that, your views of Islam are ignorant.
He's the first Muslim mayor of a major Western capital and proud of it. This is how Sadiq Khan went from the son of Pakistani immigrants to a lawyer, lawmaker, and now the mayor of London. Khan's parents emigrated from Pakistan. His father was a bus driver, his mother a stay-at-home seamstress. The 10-strong Khan family squeezed into a 3-bedroom flat in South London. He wanted to be a dentist, but TV in the 1980s convinced him otherwise.
Objection!
LA law, with its swagger and ill-fitting suits, caught Khan's eye. He graduated in 1991 with a degree in law from North London University and joined a human rights firm. Khan worked a number of high-profile cases, often clashing with London's Metropolitan Police Force. But he had bigger political ambitions.
This is what being a new MP is like, squatting on a bench in the absence of an office, dealing with letters from constituents.
Reports are just coming in of an explosion here in London.
So there's just explosions and then it was just smoke everywhere.
Everyone's just asking what's happened.
Only 2 months after Khan entered the Commons as a Member of Parliament, London was attacked by Islamist extremists.
That day will stay with me for the rest of my life.
He spoke out against the attacks both as a London MP and as a Muslim.
He has been very clear about his opposition to violence, opposition to terrorism, and has set out to make the case for a more open and peaceful Islam.
That's Thomas Penny, one of Bloomberg's Westminster correspondents.
Here is a man who is a Muslim, and he is standing up and being open and straightforward and being clear that the problem here is not Islam, but it's Islamic extremism.
In 2015, a decade after the attacks, Khan ran for mayor of London, and his faith was back in the headlines. His opponent, Zach Goldsmith, trying to link Khan to radical Islam.
The debate got again personal and nasty. The Goldsmith camp has called Khan extreme and accused him of associating with, quote, those who seek to do our police and capital harm.
There's a pattern of behaviour.
Even the former Prime Minister David Cameron repeated the allegations.
He shared a platform with Sajil Shahid, the man who trained the ringleader of the 7/7 attacks and accused the United States of bringing 9/11 on themselves.
But the smears didn't stick.
Zach Goldsmith ran a very negative campaign that was based on what people knew was a lie.
This election was not without controversy. And I'm so proud that London has today chosen hope over fear and unity over division.
After taking the mayor's office with a comfortable majority, Khan has brought a business-like efficiency to the role, scrapping expensive vanity projects like the Garden Bridge and the new Routemaster buses, which cost £350,000 each. The former lawyer who used to fight the police in court is now praised for his close relationship with them.
I was talking to a very senior police officer in the Metropolitan Police who said there was a sea change when he went into City Hall, and the police were saying how much they welcomed this because they knew where they stood and it was more straightforward to work with. So he works like a lawyer, he works like a government minister.
Khan's kept his faith at the fore. He's an outspoken voice for moderate Muslims across the world.
Donald J. Trump is calling for a total and complete shutdown of Muslims entering the United States.
Now, by giving the impression that Islam and the West are incompatible, you're playing into the hands of the extremists.
The ongoing spat between Khan and US President Donald Trump escalated when Trump went after Khan, misquoting him on Twitter just hours after the terrorist attacks of June 3rd, 2017. Khan's now one of the most prominent Labour politicians in the UK. In fact, a recent poll of Londoners found Khan was more trusted to keep the country safe from terrorism than the Prime Minister or the Labour leader. His story of going from the son of an immigrant bus driver to the mayor of one of the greatest cities in the world plays well with Londoners. But can he appeal to the rest of the nation? Has Khan got his eye on the top job? And is the UK ready for a Muslim Prime Minister?
What does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the Collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness. Don't you think?
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks!
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network, factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. monitoring other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
People think of Vladimir Putin, they think of capital P, power. And that's exactly the impression he creates. Whether it's physical power, firing different weapons, riding in various James Bond-esque modes of transportation, or tossing hapless opponents in judo. Or political power, ruling his own country with an iron fist, crushing his political opposition, or, most recently, being accused of meddling in foreign elections for his own benefit. This is how Vladimir Putin went from a poor, tough kid in Leningrad to a KGB spy to the very symbol of modern Russia. Vladimir Vladimirovich Putin was born in 1952 in Leningrad, which is now St. Petersburg. His father was a factory foreman and his mother a homemaker. It is widely said that Putin's public-facing tough guy persona can be traced back to him getting into fights when he was younger, which paved the way for him to take up judo. After getting a law degree from Leningrad State University, Putin joined the KGB Foreign Intelligence Service. He spent 16 years in the KGB. When Putin returned to Russia, he began his political career.
He went to work for Anatoly Sobchak, who was then the mayor of St. Petersburg.
That's Leonid Bershidsky.
I'm a columnist at Bloomberg View.
Putin thrived in Sobchak's administration because
he was sort of considered pretty efficient city official at that time. He was very loyal to Sobchak.
So loyal and efficient that
he was noticed by Yeltsin's close circle.
And those people soon brought Putin over to Moscow to work in Yeltsin's administration, where he quickly climbed the political ladder.
Then, of course, he was promoted to Prime Minister of Russia.
That's Dmitry Trenin.
I am currently director of the Carnegie Moscow Center.
Around this time, Yeltsin and the people around him, the so-called family, decided that Putin would become Yeltsin's successor. And then this happened. The apartment bombings were carried out in 3 Russian cities, killing 293 people and injuring more than 1,000. Putin immediately accused Chechen separatists for the bombings and followed it up with action.
He was credited with having a very successful military campaign against the terrorists.
And it worked.
After that, he became an heir apparent in the eyes of the Russian people.
3 months later, Yeltsin resigned. And on his way out, a famous exchange.
He was getting into the car in the Kremlin, and the last words that he addressed to Putin before getting into his car was, "Take good care of Russia."
So Putin took over as president, and 3 months after that, won his first election. But just because Putin won the presidency, that didn't mean he had all the power. This is Michael McFaul.
I was U.S. ambassador from 2012 to 2014. In the 1990s, there was a fire sale of all the things worth owning in Russia, and certain people,
the oligarchs,
did better than others in that fire sale, sometimes called privatization, and those people tended to be well connected with the Yeltsin regime, and they weren't Putin's friends. But they probably miscalculated, thinking that they could easily find a way to influence him. It became impossible almost from the start.
From that very moment, there was warfare between him and the oligarchs.
That's when Putin gave the oligarchs a choice. Putin's way?
Some of those people from the 90s managed to figure out a new way of dealing with Putin and have survived.
Or prison.
Others could not find common vision, and so they lost their assets.
Khodorkovsky once was Russia's richest person, worth $15 billion, but he ran afoul of President Vladimir Putin and spent a decade in prison.
With domestic power consolidated, Putin focused on restoring Russia's global influence.
Putin is the guy who believes in the expansionist Russian state. Georgia and Ukraine and all the other Soviet republics that split off when the Soviet Union fell apart, he still believes that they're traditional Russian satellites. A lot of his strategy is about keeping them in the orbit. That Yeltsin line, take good care of Russia, that's how he understands it.
And he used annexation and invasion, as well as oil, gas, and trade to keep former Soviet republics in Russia's orbit. In 2008, Putin's 2 terms were up, and he decided to step down as president. Dmitry Medvedev stepped in as president, and Putin went back to prime minister. But really,
Putin never left power. He pretty much continued running the country, and Medvedev was a bit of a figurehead.
There was actually a period of cooperation between Russia and the U.S. that benefited both countries during Medvedev's presidency.
Because Medvedev did not have the same negative attitude towards the West as Putin did.
But when Putin came back to run for a 3rd term, in the lead up to the 2012 election, it was widely believed that both the presidential and parliamentary elections were rigged, and Russians took to the streets. Putin blamed the protests squarely on America, and more specifically, Secretary of State Hillary Clinton.
He believed that she had sent, and this is his words, a signal to demonstrators.
Still, Putin won by a huge margin and set about crushing the protest movement immediately upon his return to the Kremlin. Over the next few years, Russia's economy tumbled. Putin annexed Crimea, leading to sanctions. The price of oil fell drastically. The ruble hit a new low, and America played down Russia's influence, with Obama calling Russia
a regional power.
Despite all of that, Putin's approval rating remained sky high, and then an opportunity for payback.
I think I'd get along very well with Vladimir Putin.
In 2016, there was one candidate who called Vladimir Putin very smart.
Trump exhibited tolerance towards Putin's actions annexing Crimea, and similar views on NATO and sanctions.
Secretary Clinton didn't support any of those views.
Even though Putin denies any wrongdoing,
U.S. election.
Yes.
The U.S. has accused Russia of being behind the leaking of 20,000 Democratic National Committee emails, which many say helped Trump beat Hillary Clinton in the presidential election. Which leaves us here, with the possibility of a President Putin until 2024, positioning Russia to be the world power he always imagined it should be.
Ma is Asia's richest man and most recognizable business tycoon. He's the chairman of Alibaba, China's e-commerce giant and one of the 10 largest companies in the world. Yet he still wants more.
We know where we're going. We want to be the 5th largest economy.
Big words from the man some call Asia's Jeff Bezos. He's confident, he's charismatic, and he's definitely not the average CEO. This is how a poor schoolteacher went from the classroom to being one of the most influential multi-billionaires in the world. Ma was born in China's southeastern city Hangzhou in 1964. His parents were traditional musician storytellers. As a teenager, he started to learn English from foreign tourists after China opened up in the late 1970s.
And then for 9 years, Jack Ma hung around outside the Hangzhou Hotel, which is now called the Shangri-La. He would get up at 5 a.m. to talk to travelers.
That's Bloomberg technology reporter Lulu Chen.
And I cover China Internet for Bloomberg.
Ma failed China's National University entrance exam twice before being admitted to local teachers' college. He graduated in 1988. He applied for 30 jobs and got rejected, including from the fast food giant KFC.
When KFC came to China, come to say, 24 people went for the job. 23 people accepted. I was the only one guy.
Then Ma got a job at a local university and taught English there for about 5 years, earning just $15 a month. On the side, he started a translation company with several friends. During a company trip to the US in 1995, Ma had his first encounter with the internet at a friend's place in Seattle.
I searched the first word of beer. I don't know why, because it's easy to spell, baby. And I see beers from Germany, beers from USA, beers from Japan, but there's no beer from China.
So he searched for the word China instead and still couldn't find anything. And that got him thinking. He wanted to build something that would put China on the world's map.
He started China Pages, a Yellow Pages-like website, but it didn't take off. Then Ma joined a government agency in Beijing to help set up a website. By 1999, the internet stock boom had gripped Wall Street. And back in his Hangzhou apartment, Ma decided to try again. With his wife and a group of friends, Ma raised $80,000 and set up Alibaba, a site that allowed businesses to sell stuff to each other.
人家美国人强，就强它的硬件，强就强它的系统建设，这方面确实比你早。但是玩信息玩软的，中国人的脑袋绝不比你们长。我们在座的所有人的脑袋绝不比你们长。
By 2000, Alibaba had raised $25 million from investors, including Goldman Sachs and SoftBank.
He had no business plan and zero revenue, but his eyes was very strong eyes.
In 2003, Alibaba started Taobao, a platform for individual sellers to trade with each other, and publicly declared war against eBay, who had started to make a foray into China.
Jack Ma has this famous saying that Alibaba is a crocodile in the Yangtze River, whereas eBay is a shark in the ocean. And if they fight eBay in the ocean, then they'll lose. But if they fight them in the Yangtze River, then they have a home base advantage.
In 2007, just 1 year after it forced eBay out of China, Alibaba debuted its business-facing division on the Hong Kong Stock Exchange. But it delisted 5 years later as its performance sagged. But in 2014, Alibaba raised $25 billion in the world's biggest IPO in New York.
Everybody should have a dream. What if that dream comes true?
After achieving dominance in the business of e-commerce in China, Alibaba has been building an internet empire worth $472 billion, with businesses in cloud computing, online video streaming, movie production, healthcare, sports, retail, and even news media.
Alibaba buying into South China Morning Post really raised eyebrows. This is the largest English newspaper in Hong Kong, and it shows that Jack Ma's ambitions weren't limited to e-commerce. He wanted to influence not just Chinese users, but also overseas users as well.
The US has criticized Alibaba for allowing companies to sell counterfeit and poorly made goods, but in China, it enjoys the favor of China's government. It's part of Ma's company philosophy.
In love with the government, but don't marry with them.
Jack Ma is an extremely fortunate man for jumping on the internet sector so early. Note that this is a person who has no coding skills at all. He's a natural showman and a gifted public speaker and really able to convince others to believe in his vision.
Ma's vision of growing Alibaba to be the world's 5th largest economy faces strong competition at home and abroad. It will require more than just naked ambition and charisma, but Ma is great at getting himself in the right place at the right time. So far, it's served him well.
Peter Thiel is a walking contradiction. He got his bachelor's and Juris Doctorate from Stanford, but speaks out about the horrors of higher education, saying college is
as corrupt as the Catholic Church was 500 years ago.
He's a staunch supporter of the free press, yet he bankrolled a lawsuit to bankrupt an independent media company.
But these were not journalists.
And most of all, he's an immigrant and libertarian who's the most public supporter of Donald Trump in all of Silicon Valley.
What Trump represents isn't crazy, and it's not going away.
This is the story of how an openly gay, immigrant genius, libertarian billionaire went from tech contrarian to Silicon Valley's biggest Trump supporter. Peter Thiel was born on October 11, 1967 in Frankfurt, West Germany, to Suzanne and Klaus Thiel. Peter's family emigrated to Cleveland, Ohio when he was 1. An Ayn Rand devotee during his youth, Thiel attended Stanford University majoring in philosophy.
His Stanford experience shaped a really big part of
who he decided to surround himself with.
That's Lizette Chapman.
And I cover technology and venture capital here at Bloomberg.
He and his Stanford friends made their first big splash in tech with PayPal. After selling to eBay for $1.5 billion, they would become known as the PayPal Mafia for each incredible success after PayPal. For Thiel, that began with an early, modest $500,000 investment in Facebook.
And in VC speak, early means big risk, but also big reward. He turned that initial $500,000 investment into more than $1 billion in cash.
But Thiel was just getting started with Facebook, and he went on to make a whole bunch of wildly successful investments.
From SpaceX to Airbnb to one of the largest, most powerful companies in the United States, if not the world, and of course that's Palantir.
The incredibly controversial secretive data mining startup he founded with his colleagues from PayPal. It connects data silos and then allows non-technical people to search that information for patterns. Data like
financial information, feeds from video cameras, biometric details, passport information, flight manifest.
Palantir doesn't talk much about how they collect this data, who has access to it, or what they do with it. But they have contracts with
the Department of Homeland Security and the CIA and the Department of Justice and the Securities and Exchange Commission
and several other federal agencies. It's the richest company you've never heard of, valued at $20 billion. But there are plenty of obscenely wealthy people in Silicon Valley. What makes him different...
He's a complex ball of multiple contradictions.
Take college, for example. Even though college was extremely important for Thiel, there's something called the Thiel Fellowship.
In exchange for dropping out and a promise not to pursue college, Thiel would give them $100,000 each.
You basically tell people that if you get a diploma, you're saved. Otherwise you go to hell. You go to Yale or you go to jail.
Also, his relationship with the press.
Here's another contradiction. He's donated to free press initiatives, including the Committee to Protect Journalists.
But he also secretly spent tens of millions of dollars bankrolling a lawsuit filed by Hulk Hogan over the publication of a sex tape and bankrupting the independently run Gawker Media. Why did he do this? Because in 2007, one of Gawker Media's blogs, Value-Ag, outed him as gay. And with the lawsuit, he
found an opportunity to get back at them by funding the lawsuit that Hulk Hogan was able to bring then, but he wouldn't have been able to do that without Thiel's money.
And finally, Thiel's biggest contradiction, his endorsement of Donald Trump.
When he was asked about his support for Trump, he was surprised at the outrage that came with it from many of his colleagues in Silicon Valley. He didn't want more of the establishment.
No matter how crazy this election seems, it is less crazy than the condition of our country.
After briefly supporting Carly Fiorina in the primaries, Thiel pivoted to Trump, donating $1.25 million to Trump and his associated super PACs in October 2016. And he didn't just help Trump financially. He gave a full-throated keynote speech supporting Trump at the Republican National Convention.
I'm not a politician, but neither is Donald Trump. He is a builder, and it's time to rebuild America.
And when Trump was finally elected, Thiel was given the reins to an enormous amount of power.
And I want to thank you, man. You have a very special guy.
He was named the transitional advisor. And in that role, he did a lot of interviewing and a lot of vetting to fill hundreds of cabinet positions and different jobs within the administration.
But it turns out, Thiel's support isn't unconditional.
Talking to people who spend time with him, I have also heard that he is no longer a great supporter of Trump.
It was reported that Thiel was unhappy with the direction of Trump's presidency. Ever since, he's been mum, making no public appearances, no statements, and staying out of the spotlight altogether. Although there have been suggestions that Trump could tap Thiel for a top intelligence post or ambassadorship, there's no indication he'd accept.
He's described his relationship with politics as schizophrenic. He gets really involved, and then he runs away as fast as possible.
Whether Thiel takes a new position or simply continues as a board director at Facebook and Palantir, at just 50 years old, he's primed to wield some serious influence in technology and politics for decades to come.
2016 was again the hottest year on record, and the previous 17 years have seen our 16 most scorching. Scientists overwhelmingly agree. Global warming is the culprit. And it's just getting started. Ice caps, extreme weather, wildfires, droughts, and the hits keep coming. What are we doing about it? In 2015, the world took its boldest step yet to stem climate change with a historic accord in Paris. But now comes the hard part. Nations must change energy policies and invest huge amounts of money, and they will likely do it without the United States. President Donald Trump announced on June 1st that the U.S. would withdraw from the accord.
The reality is that withdrawing is in America's economic interest and won't matter much to the climate.
Here's the situation. Decades in the making, the Paris Agreement united the U.S., China, and more than 190 other nations in a push to limit fossil fuel pollution. The UN-sponsored plan secured pledges to cut greenhouse gases, the emissions that trap heat in the Earth's atmosphere, in an effort to avoid the rising seas and other environmental disasters that climate models predict. But even if all pledges are met, the globe is expected to warm by as much as 3.4 degrees Celsius this century, more than the UN target of well below 2 degrees. Meeting the Paris Agreement means that governments will have to offer more incentives for clean energy, scale back support for fossil fuels, make emissions more costly, and reduce deforestation. It's estimated that the deal will require $13.5 trillion of spending through 2030. Here's the argument. Unlike past climate pacts such as the Kyoto Protocol, each country set its own Paris targets and then promised to revisit and improve them. The U.S. was primed to play a lead role in climate change, but Trump's Energy Independence Executive Order reverses Obama-era rules and directives put in place to combat climate change, and expands production of coal, the dirtiest fossil fuel. The resulting policies threaten the global fight against climate change. Without the U.S. commitment to emissions reduction, other countries may join it in abandoning the Paris Agreement. This could make it almost impossible and even more expensive down the line to stop climate change. Optimists argue that the shift to a lower carbon future is already underway. Businesses, cities, and U.S. states, such as California, are already investing in wind and solar and taking other steps to make it work.
I've actually been called an environmentalist, if you can believe that.
There's an inherent attraction to light and being human. And I think on a very deep psychological level, light is this way in which we experience the energy surrounding us in a very personal manner. My name is Matt Dilling. I'm the founder of Light Bright Neon Studio, and we manufacture, produce, and restore neon works of art and design. Origins of the creative content of a lot of the work at Light Bright comes from a variety of sources. Sometimes people come with a napkin sketch. Some people come with an Adobe Illustrator file. And we have a whole design team who then we kind of work together to help create layouts of what it might look like. Scale it up and create a paper template using a pen plotter. And that paper template actually becomes our guide for what we're going to bend the neon to. We take from the office into the glass shop. We pick out the right size tubing with the right color for the right size project. From there, we heat up the glass tubing. The torches heat the glass well in excess of 1,000 degrees in order for it to get into its molten state. We heat up and bend the glass tubing to match the template. One of our chandeliers has over 100 different bends in it. So each one of those bends has to be marked for a heated up bend. We also have to allow the glass to cool between the bends so that the next area can be worked on and heated up in its own unique fashion. It turns into spaghetti, and then we have to make sure that that spaghetti lines back up and cools to the template. We use a blow hose to connect our mouth to the tube, create a volume that's closed, and we can control the pressure in there with our mouth. There's just a variety of challenges that come up inherently in working with glass. Glass can crack due to stress, and sometimes you'll just have a batch that all it wants to do when it gets near a torch is crack. After we've bent various components, we have to go in using the crossfire or the hand torch and actually weld all of those pieces together. The last step on that is then to weld on electrodes onto either end. Each one of those steps is very, very specific. I draw inspiration from so many different experiences. It's hard to come up with one thing that's particular, but one of the ways that I really am able to connect with the creative is to float. Floating is a similar experience to meditation, to psychedelics. Going into a blackened room and laying out in a body of water and salt that's heated to your body temperature, and it allows for all sort of external stimulation to fall away. And your internal world really begins to bubble up and manifest. You really get to experience a different relationship to your mind. I think I work with neon because I can't not work with it. It's so challenging and so rewarding. And those things are so intertwined that there's no way of separating it out. I've learned so much and continue to learn so much by working with it. I find so much inspiration in working with it, and I just continue to experience new and different things through the medium. It's that close to me at this point. Once the neon tube is completed, we have to hook it up to our manifold for bombarding. The manifold is opened, a vacuum is drawn. We check the tube for leaks with our Tesla coil. We close the tube back off, and we heat it up using a very large and powerful transformer. As the tube is heated up, it releases anything that's not inert inside the tube, and we evacuate that out. We introduce the gas into it. and we seal the tube off, sealing into that tube whatever gas we introduced into it. I think my favorite part of making a neon light is when I see it lit up for the first time. Different gases, when electrified, emit different wavelengths of light. Neon gas is this very bright orange, fiery red color. Argon gas creates a very intense blue, but that light output that is produced can then be expressed in a different wavelength by coating the inside of the tubes with a phosphor coating that takes that one wavelength of light and emits a different wavelength. We bring it over to the aging table where we hook it up to an age-in transformer and allow it to settle, age the gas in that we've introduced to it. There's always a stray particle of something left inside the tube. But that time that the oxide coating can act to scrub whatever is left inside the tube while things are getting settled into place. Once the tubes are aged in, we move on to our process of assembling two halves of the fixture together in a jig, gluing up the center of the fixture to its spindle. Once the adhesive dried, we would connect the wires from the fixture together into a transformer, and we turn on power and it lights up. Part of what we love about what we do here is that we try and put out into the world the kind of things that we'd like to see. I still am surprised when it lights up. I'm still excited when I get to see it illuminated. There's an ineffable quality to it. To me, it is this insight into the inner workings of the universe. It literally is. It's a way of looking at what is surrounding us in the cosmos in a new light.
a bit like an addiction. You've got to make something, you have to do something. It's borderline obsession. And every bike we build is my favourite bike at the time, and as soon as it's done, I want to build another one. Sven Cycles is something I've been thinking about ever since I started cycling in my late teens. We want bikes that ultimately you'll really enjoy riding. There's never a bike that's the same. There's always a slight change. And as we build them individually as well, they have the marks of a bike that's built by hand. Most people I know cycle have an idea of their dream bicycle. And it may be an evolving idea you've had in your head. And we've worked with a lot of people that have come to us with sketches and scrapbooks. It's really, really nice to build something that's just one-off and unique. I think a lot of people see a bicycle as two wheels and a frame in the middle. There are a lot of subtle changes and nuances in design which can change the riding characteristics quite dramatically. I'm a really big fan of modernist architecture, and the simplicity of a modernist building is really hard to achieve. And with some of our bikes, they may look very simple, but I think people should not underestimate the time and effort that goes into designing a product. Tubing is key to a bike's feel and ride. Reynolds tubing has been in my life ever since I can remember. Growing up, I could never afford a frame manufactured with their tubing. We can now put a badge on our bike saying manufactured at Reynolds, which is a sort of thing as a kid I just wouldn't have believed was going to happen. Every part of the bike has a specific tube. It's not universal. The first thing we do is get the tubes out, check they're correct, check the wall thicknesses, sand the edges, make sure it's all really clean, because if it's not clean, the tubes won't join together correctly. We build in steel because I still believe it's one of the best materials to use. It's been used in bikes since the late 1800s, and they're still using it now for a very good reason. It's the flexibility that we can replace the tube, repaint the bike, and you wouldn't know it's damaged. I just like working with it. It's very sculptural. This isn't sort of aerospace precision engineering. It's a steel rule and a marker. So when we're cutting the tubes, it's within a mil or two. But what we're trying to do is take the best from bicycle building in the past and add a little bit of modern flair to it. There's various techniques for building bicycles. We do a thing called fillet brazing, where you connect the pipe together. We use a bronze rod and a flame. We heat the tubes up to the same temperature and we fill the joint with bronze. And it gives a very, very sort of fluid, lovely, sort of quite sculptural feel. You've got to practice. You've got to be able to judge material temperatures. You've got to just look at it and you just get a feel for it. It's the stage where your tubes start to look a bit like a bicycle. My father's a jeweller. He'd make sort of very pretty things, which are lovely, but for me, they don't really have any function. What I love about bicycles, you can start on a Monday with a box of tubes, and you can be riding it by the weekend, and it can last you for the rest of your life. Outside of the frame and forks, the other most important part is the wheels and tyres. When you build the wheels, you have to lace them, so there's little holes going all the way around the rim. You poke the spoke through. We do build all our wheels by hand here because a machine can't get 30 years worth of wheel building experience. Colour is very, very personal. With any of our bikes, you can have them painted whatever colour you want. We've matched one to a teapot, so we can get that scanned and we can match that, or someone's favourite item of clothing. I like to let the bike sit for 4 or 5 days minimum, just so the paint can have time to cure a little bit, and then we assemble it. We get out all the new components, and it's a case of putting them together. Some bikes you can assemble in 3 hours, some will take 3 days. And we've built bikes that cost in the £10,000 plus mark. Some people, they're saving up and this is their bike and they're going to own it for the rest of their lives. So we just want to make sure they get the right thing. I think the bike for me was the first time I had some freedom. So as soon as I had one, I was off. A lot of people still get that thrill as when they were a kid blasting down a hill, wind going through their hair. It's fun. Everyone has their favourite jacket or something that just makes them feel good. If you've got a bike that fits well, you actually feel part of it. Building bicycles as a creative outlet is fantastic. It's not something you do because you're going to get a big paycheck at the end of the day. You do it something you have a passion for it.
If you ever saw a wooden surfboard, it was probably hanging in somebody's house or underneath the deck. But kind of in the last 10 or 15 years, wood has made a big comeback. They surf wonderfully. It's beautiful and it feels great to be on one of them. I always had a love for wood and kind of passionate about things that went in the water. I've kind of been around wooden boats most of my life. There's just so much character. The way they're built, the stories that come with them, a lot of that has translated over to why we build surfboards the way we do. When we first started thinking about building surfboards, wood was the natural material we chose. They have a very high strength to weight ratio. Wooden surfboards have the longest history of use in the surf world than any other material. People have been surfing wooden surfboards since kind of the first documented history of people riding waves. The board starts in CAD, where we take a 3D model, break down the shape, and kind of create frames and templates and all the inner parts of the board that we get cut on a CNC machine. We take those frames and we just pop them out, assemble the frame into kind of a skeleton. We go out to our lumber shed, pick a bunch of cedar, and bring them into our mill shop, put glue along the edges, clamp it all together into a panel. Everything's book matched. You have symmetry in the colors and texture of the wood. Cut your outline. Take our assembled frame, gently put it down right on top of the plank. Once that foundation is started, you're basically building up the three-dimensional shape, the outside part of the board, using lots of strips that kind of interlock and fit together. Every piece of wood is going to be different, and it's all going to react differently. There are frustrations with it, but I think that's one of the things that keeps it challenging. You learn to read the kind of what the grain lines are doing and what the color of the wood is telling you. Once those rails are cleaned up, we put our top planks on. It's a little bit like putting a lid on a box. It's like, this is it. Whatever's inside that board is staying inside that board. And by tensioning some rope, you can clamp the two together. It's like a time capsule. What makes our boards unique are they are built right here in York. They're built using material that grows right here in the state of Maine. They're built 100% by hand by local craftspeople and surfers. There's a lot of time that goes into these boards, between 40 and 60 hours start to finish. We wanted to build surfboards that were as hollow as they could be, but still be strong enough to work well. Too light and they don't surf well, but too heavy and they don't surf well. So there's a balance point there, and that's where we try to be. Taking the board off the rocker table once the top has gone on, that is by far one of my top favorite parts. It's just you and a shaping stand, a board, and a hand plane. Everything else is out of your view. It's simple, it's pleasurable, it's quiet. You can be with your thoughts and you can just kind of be present. There's something about taking a nice sharp edge tool to a beautiful piece of wood and feeling the curls coming off and knowing that every pass that you're making, you're kind of getting it closer and closer to what you have in mind. Once we've shaped it down and the board's looking like it's supposed to look like, time for it to go into the glassing room. 4-ounce fiberglass, laying it over the board, draping it over the edges, cutting it, applying epoxy, and on the board. Once both sides are lamb coated, it's time to put in the hardware. Drill and router and install the fin box. And on the other side, we drill and put in the leash plug and a vent. There's a lot of air just naturally inside the board, and that air wants to expand and contract with temperature changes. And that vent has a little piece of Gore-Tex fabric in it, and it allows air to kind of breathe both ways, but it doesn't allow water to get in. Once all that hardware is put in, it goes back into the glassing room. We brush a nice, beautiful, thick coat of epoxy over the whole surface, and that we call a gloss coat. That's supposed to look beautiful and glossy and shiny and flawless. You get to see that board come to life. Whatever the colors in the wood, they really come out. It just makes it look like candy. You just want to touch it and run your hands down it, and it's just kind of the icing on the cake. Once everything is hard, we put it into what we call the oven, get that epoxy to cure, really kind of bake it, and just get it to harden. Put in the fin, screw in the vent, and ship it out. We just love the idea of building something that's sustainable and long-lasting and made by hand. It kind of gives you a deeper connection to the product over something you might buy on a shelf. When a customer gets the board, they feel it. They 100% feel the amount of work and the amount of passion that went into the board. So I'm not really looking at hours and efficiency. We're looking at like doing it right and enjoying it as we go.
Ma Baoli, better known as Gang La, is one of the 4 grand marshals leading New York's Pride Parade this year. But in the country he comes from, being gay is still a social taboo. The CEO of a Beijing-based internet company is on a mission to improve the lives of millions of gay men in China.
对于每一个 LGBT 人群来说，即使这个国家不允许你跟同性爱人结婚，但是你仍然要勇敢地去选择你自己的生活，你仍然应该拥有幸福生活的权利。
Ma's company Blue City runs an app and a website specifically for gay men. Blued is one of the biggest gay social networking apps in the world, with an estimated 30 million registered users. Unlike most other apps, Blued is more than just dating or hookups.
大家可以在我们这个软件里面找他自己的情感，然后可以阅读相关的内容，然后可以进行一些娱乐，比如玩游戏啊，比如看直播啊等等。
Back in 2000, when Ma studied at a police school in northern China, he realized he didn't feel like everyone else.
因为他们都找女朋友，然后谈恋爱，但是我对长得好看的同性的男生，我反而觉得对我更有吸引力。所以那个时候我就到互联网上去找这样的一些资料，然后希望能够告诉我自己，我到底是谁。互联网上所有的信息都是负面的，都是错的，就是说同性恋要电击疗法，要被治疗，然后要吃药等等。
After visiting some foreign websites with different attitudes to homosexuality, Ma created his own site for a Chinese audience, encouraging people that
他们也是正常的，他们不用自卑，然后也不用自杀。
Even though attitudes towards homosexuals are slowly changing in China, it's still a social stigma. The virtual world of Blued, where members can be open about their sexuality, is for most a striking contrast to their real lives. This is live streaming, a function added to Blued in late 2015, right as the internet craze was starting to take off in China. Many self-made stars like Jin make decent amounts of money by receiving audiences' virtual currencies and gifts.
我们不是彼此的初恋，初恋这种事儿多不靠谱啊。
For Kyle and Klaus, a couple who have come out, live streaming on Blued means something different.
其实我经常会收到很多粉丝的一些互动的留言，就是类似就是说你们让我们看到了同志情侣之间的一些希望啊，我看到这样的留言我是很欣慰。
The government's rules for acceptable content online may shift quickly in China, with LGBT material in a grey area. Many companies feel the chill of the recent internet crackdown, but Blue City still runs as usual. Ma has won the Chinese government's trust by helping with HIV prevention among gay men. A third of the company's staff are dedicated to screening pornographic and politically sensitive content.
我不太多的愿意去对抗，我更多的愿意去对话，去改变他们的想法。我觉得这个可能在中国来说是更有效的。
In the past 5 years, Blue City has grown from a team of 7 people to a promising business with about 250 staff. Ma said the company earned over $15 million last year, mainly through advertising and selling virtual currencies to live streaming audiences. Now the company is expanding overseas.
我希望吧，通过我们的努力，Blued能够成为全球第一家在美国纳斯达克或者是纽交所上市的这样的同志互联网公司。
This is Rich Chiga. He's a Chinese rapper by way of Indonesia, and he's very popular on the internet. This is Joji. He's a Japanese-Australian singer, and he's also very popular on the internet. Plus, Joji invented the Harlem Shake meme. Let me say that again. This guy, Joji, in the blood bathtub, invented the Harlem Shake meme. But we'll come back to that. So Rich and Joji are both signed to 88 Rising, an entertainment company hoping to build a lasting global brand that will outlive singular moments of virality. They primarily create content combining Asian culture and hip-hop, a formula that apparently pleases the internet gods greatly. They've only been around for 18 months, but they're already putting up major label numbers.
I think that we have an unprecedented collective of talent, a group of like predominantly Asian artists, you know, really like making waves globally, which from an independent point of view as well.
88's founder, Sean Miyashiro, cut his teeth launching Vice's electronic music channel, Thump. But quickly, Sean became interested in life beyond dance music.
I knew that after launching a whole content platform that I have kind of the ability and the know-how to do it again, but like for what was the question.
So Sean moved to the Bronx to start over and figure it out. He couldn't afford an office space, so he worked out of his car at the top of a grimy parking garage.
Everything kind of started here. If you look around, this is my environment. This is my serenity, really. 88 Rising was built here. Built on the grounds of LA Fitness, residence in a parking garage. I was living in the Bronx. I'm just like, damn, where the hell do I go? So I just come up here and I like, you know, I just kind of figure things out every single day. Being like, okay, what the hell is this thing? Coming here was kind of like my own kind of private office, basically. Like, to be honest, I would even go to the bathroom here. I would like take pisses here, you know what I mean? Like, it was, you know, it's just too far to go back down there. When I need Wi-Fi, I'd spend a good part of the day at Dunkin' Donuts. Hi, how are you? Can I get a chicken snack wrap?
Before 88 Rising officially launched, Sean caught a surprise break in the form of a Twitter friendship with a funny 16-year-old kid from Indonesia named Brian, who taught himself English by watching Rubik's Cube tutorial videos on YouTube. Seriously, that's true.
I thought his Twitter was genius, from the future, just crazy, and like just the shit that he was saying, like the memes he was making. But I didn't know that he rapped or anything like that. I really didn't, and he came up with Dat Stick like 2 weeks later.
12 in the morning, pop shells for a living and baby gon' smell blood trail every minute road.
Dat Stick was Brian's first ever attempt at making a rap song, and it immediately went viral.
Everything was great about it, but the one thing that I noticed is the song was hard as hell. Just like everything about it, man. Just like, it was menacing, bro.
Soon after the video dropped, Brian signed with 88 Rising.
I'll FaceTime with Rich. Sorry for calling you Rich Chiga on my phone, Rich. Brian, he gets like super pissed off that he's saved in my phone as Rich Chiga. He's like, dude, am I not a human to you? What's good, bro?
What's good, brother?
How you doing?
Bro, I took my doing great. I just did sound check.
How was it?
It was tight. Hold it stick glocks, but you been a bitch, suck a thick cock.
So Brian could definitely rap, but some viewers understandably took offense at a Chinese kid satirizing rap cliches and calling himself Rich Chiga. But if a group of well-known rappers saw the video and genuinely liked it, that could at least help validate Brian as a legit hip-hop artist. Plus, it could be really funny.
It was just kind of an idea that I just had on the spot. Everything that rappers say is better and funnier and smarter and wittier. You know, and it's just more entertaining. We just edited it as tight as possible, put it up, and it really worked.
Yo, this nigga got a pouch on and a Reebok pouch.
This is the hardest nigga of all time.
You said when you come for a trigger like me. That was dope.
Like, it's just lit, and I think people will take it as a joke at first, but it's like if he ran with that and kept doing more videos like that, it's just lit.
You know, I'd never been to America before, and like all of a sudden, it's like I see like all the rappers that I listen to just like reacting to my stuff, and I was like, what? How did this happen?
The reaction video also went viral, and even led to a remix of Dat Stick featuring Wu-Tang's Ghostface.
I'll get on that track. You know what I'm saying? Yeah.
Really, on the remix?
Yeah. Oh, you know him?
And yeah, the remix went viral too. Brian has since acknowledged the misstep in his name and claims he may change it. But for the time being, he's still Rich Chigga to his fans. An ever-growing global audience, hungry for more releases from emerging talent around the world.
I didn't know that it was gonna be this impactful and this important to people, and I'm very thankful and blessed that it has. And every day now that I wake up, it's like it's just like a new mission every day.
A major part of that mission involves Joji. Remember the bloody bath guy? He's a former YouTube personality in the middle of a career transition.
The sound of this song, Will He, it's like a trap song that you can like slow dance to. Awkward prom shit, you know what I mean? I used to do crazy episodic internet videos. It was going well, and one day it was me and a few friends just in a room. We were casually chilling, and then someone plays the song, and it's brand new at the time. I happened to have a lot of costumes laying around, so I told the other guys, I was like, get in these costumes and let's just dance to it, like who cares? We were like, okay, let's just go crazy at the drop. So that video goes up, I go to sleep, and the next morning, everyone's doing it, like next morning. That taught me a lot about the internet, how people want to just be a part of something. And from that point on, something changed, and I was a little better at understanding demographics and people and what they want to see and what they want to hear. I was friends with a couple other artists who were affiliated with 88, and then I also started to realize that 88 is the bridge between Western and Asian entertainment, and I really wanted to be a part of that.
Joji just released the In Tongues EP, his first project as a serious artist.
Joji's In Tongues record came out a couple weeks ago. It's #2 on Billboard on the R&B charts, which is crazy for, independent release, and he's like a brand new artist.
And the success is even more impressive, knowing he went from creating something like this,
It's just Taco Bell, what could possibly go wrong?
to creating something like this, the newest music video for his song Demons. Tonight, Rich Chigga has a show in New York City. Tickets sold out in an hour.
I came here, I'm first online. I was here at 1. Yeah, I was the third person online.
So why'd you get here so early?
Because I want to see Rich Chigga. I want to touch him.
What do you guys think of Joji?
He's
That's my dad, son.
You guys cop the new EP or like?
Yeah. I woke up at 6 in the morning just to cop that shit. And then I listened to it, and that shit started making me cry.
This is actually kind of exciting. Every time, this never gets old. Like, you live online and social media, but like, there's nothing like just being with the people.
More often than not, viral success happens by accident. And then after an appearance on Ellen or Jimmy Kimmel, the creator's star power fizzles out. But 88 Rising has figured out how to turn potential gimmicks into brands with an actual following that keeps coming back for the next thing.
Oh, shit!
So keep an eye out for 88's next move. But more than likely, it won't be covered on network television or terrestrial radio. Although, as they've already proven, nowadays that really doesn't matter.
Online retailer Farfetch is betting it can shape the future. This is its concept store, showcasing the latest in retail tech.
How do you capture all of that fantastic information that you gather in store with customers, touch and feel products? And we created a concept called the Connected Rail. And this is using a combination of RFID and ultrasound. The RFID signal recognizes the product, and the ultrasound recognizes the movement. Take the product off, and then you'll start to see your products appear. And essentially, it's like online browsing behavior. Whichever products you touch and pick up in the store are automatically sent to your app. This is effectively what you've created is your in-store wish list. In the middle, you'll see essentially a hologram of the product. What the customer sees, they control the experience on a touch device. What this allows the customer to do is take elements of products and then add their own style to it. Right, so this is the connected mirror. So in this example, I see my products. I select a coat, and that's tried it, and it's slightly too big for me. So what I can do is choose an alternative size and send a request to the sales associate, and they'll bring that size to me in the fitting room mirror. You'll also see that we've got some product recommendations here. Crucially, the sales associate's able to push items into the mirror from their device. If you wanted to, you could simply use the mirror and pay and go. Your items would then be packed and dispatched to you afterwards.
Do you want me to turn you so you're looking outwards? Yes, please. How about there? First time we came out with B, Jade said, "It feels like I've been released from prison." Do you want these, Mrs?
Definitely.
Definitely. Right. Yeah. And she could say hello to everybody, people she hadn't seen for months.
It's
Hi, it's
Jade.
Jade.
Oh. So you can talk to Jade through this?
Hi, Katie. She's there.
Hi.
Every time anyone's seen her, they want to know why she's there. And it's kind of the opposite of when you're in a wheelchair and people see you and they kind of go, oh, should I look? I don't know what the right protocol is. When there's a tiny robot with its bright little eyes going around just looking happy everywhere, it really opens you up for conversation.
You've got some friends here, look.
Hiya! When I saw her for the first time, I remember thinking, this is going to change things. This is one of those points where if this was a book, this would be the cliffhanger. condition called Ehlers-Danlos syndrome, which means that I have a lot of dislocations, there's a lot of pain, and a lot of seizures and whatnot. So I can end up on my own in my room for long periods of time. A lot of the time, with a condition like my own, of course there's the pain, and the pain is bad, and the dislocations are bad, and the seizures and being in paralysis and never knowing whether you're going to be able to wake up properly tomorrow, that's bad. But what's worse still is being able to count the number of people you see a day on one hand.
Are you ready?
Sure am, I'm just hoping the connection's going to stay.
Yeah, me too. Alright, here we go.
When you're used to just the same little metre by metre and a half window every day, and you've been there for months, being able to just see the sky from somewhere else, or the tops of trees, or a sign, is incredible. Or being able to have that kind of chat in the car that most people would probably take for granted.
I'm going to go past Grandma and Grandad so you can give them a wave. Now, if Jade is particularly seizure-y, she can still take part. And that's brilliant, really, because before she would just be left in a bed or in a house with just her carers. It's quite a small world, that.
Right, so there's one of them. Here, this costume I'm busy making at the moment. When I'm not on bed rest and I'm not just wearing pyjamas all the time, I enjoy being able to dress as different characters and go to Comic Cons and that kind of thing, because it just lets me show a different side of myself, and it's a bit of fun. If you can't go out that often, you've got to enjoy it when you do. Was that? Good. It's one of those weird things where I want to not have to use B because I want to be well enough to be able to go to those places myself. Like, it really makes a big difference to me to be able to go into school. But the thing is, with my condition fluctuating all of the time, I can't go into school reliably. Written out bigger on the board. Thank you. Today's the first day that I've been in school via B, and so far it's interesting. Still a few little things that we need to work out, but for the most part I think it's going fairly well. And it's brilliant because I can really tell the difference between today and yesterday. How yesterday I forced myself to go into school when I wasn't very well, and I was really tired afterwards and ended up having loads of seizures. Whereas today I've been able to do all of the work, I've been able to keep a clear head and not be ill, which means I'm able to be more focused on my schoolwork.
So there is my first step of working, is to simplify root 8. The algebra test is next week.
Now I'm trying to make friendships which I'll be able to maintain with B. Before that, I end up letting people down quite often. B gives me hope, yeah. She's just always there. And if I can't do something, she can. And if I need sort of assistance to be able to make commitments, then she's there, and she means that I feel like a more valuable person because I'm more reliable.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network, factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
The cubicle represents a tyranny. It confines your imagination, your thoughts, into a small physical area. Imagine pretty much every software engineer or finance person being able to, disconnect from their desk and look at holographic monitors on a beach and doing their work from there. That's not going to be science fiction. It's the modern office place.
Silicon Valley is all about building the future. A startup called Meta thinks it's getting there first, thanks to a big bet that it's made on augmented reality.
How are you?
Good, thank you. Welcome to Meta.
Thank you.
Call it a 360-degree office where you can spatialize your thoughts as part of your workflow for education, architecture, design, engineering, etc.
People often mix up augmented reality with virtual reality. VR totally blocks your ability to see or hear the real world. AR overlays holograms onto what you already see. Meta has tried to make its version of the workspace feel familiar.
You grab the hologram instead of using a controller or a mouse, and your brain already knows how to do it. In other words, we've designed an operating system that humanity has always known how to use. So you can see this eyeball, which is, by the way, photorealistic. You can see my hand is occluding the eyeball, and now the eyeball is occluding my hand, right? You see those two circles? They get small, and then they turn into this glowing white ball, and then I can move my hand around supernaturally. I can do this with two hands and rotate the thing. I can stretch it. I can throw it back right into the shelving system, and that's all you have to learn to become a modern worker.
And to prove this, the employees at Meta have started to get rid of their computer monitors, trading them in for Meta's augmented reality headsets. Meron thinks that in less than a decade, we'll all be just wearing strips of glass that can project holograms.
In the early 80s, everybody had computers on their desktop, but no one was using them because they had a lot of work to do. So they were still using typewriters. And at some point, the CEO took all the typewriters away and everybody was forced to use their computers. So it's very exciting to see a new generation of technology, a new paradigm.
I consider us like pioneers in the holographic wild. I'm pulling up my browser with my hands and sending out emails to colleagues and just kind of really acclimating to the new environment.
Now you're putting on my computer, essentially. Our digital lives live on our phones. We have all of our pictures and notes and all these kinds of things. So, and why don't you write yourself a little sticky note? I like it. And go ahead and just take your fist right over the top of the sticky note and close your fist. And now...
Oh, what? Meta's own transition to augmented reality has run into plenty of unexpected problems. And it's still going to be a while before you'll start to see these devices in your office. But I think it's a future worth waiting for.
If we could see these holograms between us, we will have been able to share our work with one another more naturally, more efficiently, and more productively than ever before. Humanity will have evolved slightly.